declined overall. The virus's BA.2 strain continues to spread, leading to concerns about a resurgence. Meanwhile, President Biden is concerned about the next pandemic and has proposed additional money in his newly released budget, as we hear from Bloomberg's Amy Morris.
Health agencies would get nearly $82 billion in mandatory funding over 5 years to help prepare for future pandemics, even as the administration also asks for more money, $22 billion, to fight the current one. The Health and Human Services Agency would get a 27% increase in funding to emphasize vaccine programs and expand immunization efforts. Another $5 billion would create Biden's proposed new biomedical research agency known as ARPA-H. In Washington, I'm Amy Morris, Bloomberg Radio.
Still no ceasefire, but some progress in Russia's invasion of Ukraine. Moscow says it will reduce military operations in areas where its forces are being pushed back, including the capital of Kyiv. President Biden, though, is not convinced it'll happen.
We'll see. I don't read anything into it until I see what their actions are. We'll see if they follow through on what they're suggesting.
Biden spoke during a joint news conference with Singapore's prime minister. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nancy, thank you so much. Carol Massar, Tim Stenovic, live in our Bloomberg Interactive Broker studio on this Tuesday. We're going to talk a little bit about the news coming out of Russia, Ukraine, where we are on that. In the meantime, a story that caught our attention, Tim, by our own Danny Lee.
Yeah, this is, you heard in the past few weeks about airline companies, airliners coming out and saying, hey, we are no longer flying over Russia and Ukraine because of the ongoing conflict. We have to have contingency plans. Well, we're learning more about one right now. Cathay Pacific Airways is rerouting its New York-Hong Kong service to avoid Russian airspace. This, Carol, would be the world's longest commercial passenger flight by distance.
Yeah, the airline plans to fly from JFK International Airport, that's here in New York City, over the Atlantic Ocean, the UK, Southern Europe, and Central Asia, according to a memo to Cathay flight staff that was seen by Bloomberg News. Distance is 16,680 kilometers. That's 10,326 miles. It would surpass Singapore Airlines' New York service, which takes about 17 and a half hours to cover more than 15,000 kilometers. This is according to Flight Radar 24 data. The Cathay new flight will take about 17 hours. So that's basically a day of flying.
Yeah, it's a long flight, especially if you're at the back of the plane. A spokeswoman for Cathay said that Airbus's A350-1000 is capable of operating this route, which would typically fly over the Arctic and then through Russian airspace. As we've talked about on the program many times, Carol, many Asian airlines and other airlines also are avoiding Russia due to the conflict in Ukraine.
Yeah, the airline also saying it's monitoring tailwinds every day and that their benefits are diminishing. Jet streams tend to be stronger in the winter months. I mean, this is so true, right? When we're flying east versus west, right? How flights, the duration changes because of those winds.
Okay, there's a great chart in here that shows the duration of different destinations.
Yeah.
So New York, JFK to Hong Kong, the planned one, 16 to 17 hours on Cathay Pacific. Singapore Airlines, Singapore to JFK, 17 hours, 31 minutes. And then Sydney, Dallas, 14 hours and 30 minutes.
God, these are long flights.
I know.
Bangalore to San Francisco, 15 hours. You can see a lot of probably traffic right between Silicon Valley and India. All right, folks. Carol Massar, Tim Stanovic, we're just getting started on this Tuesday. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks do remain higher. The U.S. 2-year yield exceeded the 10-year for the first time since 2019. S&P up 36 right now, higher by 0.8%. Stocks are gaining amid optimism for progress in talks between Russia and Ukraine. The Dow up 180 points, up 0.5%. Nasdaq up 212, a gain for Nasdaq of 1.48%. 10-year yield 2.38%. 2-year yield 2.37%. Spot gold down 0.2%, down $4.89 the ounce to $19.17. Crude West Texas Intermediate down 0.8, 105.11 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks. Well, Ukraine and Russia failing to clinch a ceasefire in talks that ended in Istanbul on Tuesday, today. Moscow saying it will reduce military operations in areas where its forces are being pushed back. Kyiv calling for security guarantees from the EU and NATO members. A lot going on, so let's get to it. Joining us right now is retired Major General Mastin Robson. He is geopolitical intelligence advisor to the Academy's advisory board, and he served over 34 years on active duty in the U.S. Marine Corps and was in more than 60 countries. He is on the phone in South Carolina. Also with us is Bloomberg political news director for Bloomberg Radio and TV, Jody Schneider. Major Robson with the Academy Securities Advisory Board, as we said. Jody, let's start with you. Headlines, optimism. We saw it play out in the markets a little bit. What do we really know?
Yeah, though the markets were optimistic, equity and oil markets, it seemed that they were maybe a little bit, trying to get excited about something that maybe isn't quite there. There were talks today in Istanbul. They ended without a ceasefire, without Russia really committing to much, saying it's cutting back forces in Kyiv, but they're losing there. So they already were sort of on the retreat there. They haven't said anything about the other areas where they have been advancing, and they haven't said anything about the major things on the table: withdrawal, ceasefire, what happens next, any security kinds of guarantees, the things that Ukraine has been seeking, and anything about NATO and anything that the West has been seeking. So it really does seem like it's the start of talks. There's talk about a pathway to Putin and Zelensky meeting, but again, nothing concrete. So, they didn't go badly, but there wasn't a lot that you could take away from them. And I think the markets were just optimistic on the fact that, they're going somewhere, maybe really slowly.
Mm-hmm. Major General, come on in here and weigh in on this and give us your reaction to seeing this news that, at least here in the United States, crossed overnight. Is it a reason for optimism?
Economically or militarily?
Militarily,
it's not. Yeah, it's definitely not optimism. And I think we need to be clear of terms. Putin will never say he's withdrawing. What he'll say is he's attacking in a new direction. He's refocusing his campaign, which I think is what he's doing. It's a disaster for him to go back home without a win. If you buy into the idea that Putin's long-term end goal, now that he's a president for life, and basically has done everything he can do and be infinitely wealthy, what he really wants is to elevate Russia to the world stage once again, and he can't do that without some sort of bringing something home. So in the current campaign, I think that he'll continue to inflict damage on the cities to the west and the north, mostly with indirect fire and air, because he can't. If he lets go of that, he loses that pressure he's putting, and everybody loses that as part of the bargaining of I will stop if I get something in return. I think he'll consolidate the campaign. He'll move it to a more limited objective in the Donbass, and keep in mind that there are really only three options Putin has. He quits, and I don't think any of us think he's going to do that. He escalates, and we don't want him to do that. Or we find an off-ramp through negotiation that allows both sides to be able to claim something. But most importantly, Putin's got to be able to claim something he's achieved with this. And if you fast forward to the end of the year, the end of 2 years, the end of the month, whenever this comes to a peaceful resolution or an off-ramp, Putin's going to have some explanation when the forces come back to Russia without equipment and without a lot of soldiers who are dead or that are wounded as to, was this worth it and what did we get? So what does win look like for Putin is a good starting point. for how do we find an off-ramp that creates a negotiation room to be able to bring a settlement.
Major General, this is Jody Schneider. What does that off-ramp, what could that off-ramp look like? What are the potentials there? Because as you pointed out, there's fairly limited options here.
Yeah, I mean, I'd like to say it's box seats at professional athletics games here in the United States, but that's probably not going to do it. But what we've heard President Zelensky talk about, he's mentioned neutrality. He's mentioned the plausibility of, is there some agreement with Crimea that's more official? He's mentioned the Donbass. And I think those are the three that are most likely to be on the table. Is Putin willing to accept a neutrality agreement that's official and that's, a stake driven in the ground? That certainly gives him what he said he wanted, which is Ukraine never becomes part of NATO. They are neutral. Does he get Crimea as an official part of the Russian Confederation? That's probably a plausible something on the table to negotiate over. Donbass will be the hard one. Putin will want something hard in Donbass that shows it was worth his time, and Zelensky is going to want independence for Donbass, and that's really where I think it'll boil down to the negotiation of how do you sweeten the pot for Putin, and how do you sweeten the pot for Zelensky to be able to come up with an agreement. I have a hard time seeing where we're going to pressure him economically to make a decision right now, meaning Putin.
General Robson, if you were advising President Biden and current military forces, I mean, have things changed at least for the medium term in terms of how the world, and certainly NATO and the United States, will look at Russia going forward? Is Russia going to be secluded because of this? Is there no way of kind of going back, at least, like I said, in the short and medium term?
Yeah, there's no way of going back to where we were, but that doesn't mean there's not a place to go that could be positive for everybody. These type of things certainly create scars and create memories, and they create problems. In regard to President Biden, I think he's done what he can do short of trying to keep this from escalating. Mm-hmm. And that's what his primary objective is. How do we do something that puts pressure on Putin without escalation? Putin, on the other hand, has a different metric of what he wants. So my advice to President Biden is probably, he's rallied the world unbelievably successfully that nobody thought would be plausible at this point. Right. He's unified, or at least Russia has unified. Putin's unified NATO. He's unified the EU. He's unified the world against him economically. Okay. None of which I think he thought was plausible early on when he first started this thing.
We got to run. Thank you so much, General Mastin Robson, and of course our Jody Schneider here at Bloomberg. You are listening to Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yeah, this is Bloomberg Business Week. Carol Massler along with Tim Stanovic on this Tuesday.
Have you ever wondered where a plastic bag goes when you recycle it?
I think about everything in terms of recycling.
I do too. Well, fortunately, we have a great team here at Bloomberg, and also they're equipped with some tracking devices that allow us to know where a plastic bag goes after it's recycled in the UK.
It's a long journey. That's going to be our tease, right? All right, we're going to get to that story. It's among our most read, and it is the Bloomberg Big Take today. But first up, let's get back to the markets and a check on your top business stories. Hey, Charlie.
Well, hello there. Lots going on. Great article, by the way. I read that this morning when I was reading it. I couldn't stop reading from beginning to end. Lots of great graphics, lots of great visuals for our Bloomberg customers. The Dow, the S&P, NASDAQ are all pushing higher. S&P up 39, up by about 0.9%. We've got the Dow rallying 217, up 0.6% right now. NASDAQ up 214, up by 1.5%. Stocks higher amid optimism for progress in talks between Russia and Ukraine. Benchmark Treasury yields retreated with a key segment of the curve inverting for the first time since 2019. We're talking 2s, 10s, 10-year yield right now 2.38%, 2-year yield right now 2.37%. Spot gold down 0.3%, 19.17 the ounce. West Texas Intermediate crude tumbling 2.1%, 103.77 a barrel, and a barrel of Brent down 2.4%, 109.75. Johnson & Johnson says it has suspended supply of its personal care products in Russia, quote, due to the increasing scale of the humanitarian crisis. We've heard from many companies who have said they are quitting Russia because of the invasion of Ukraine, but how is that affecting big pension managers and their holdings? Karen Frank is Senior Managing Director of Equities for the Ontario Teachers Pension Plan.
We have had some portfolio companies who've made those decisions. They've closed down factories. We absolutely support and, in fact, agitate for those outcomes and believe it's the right thing for our stakeholders. We're a values and principle-based institution. We think that those actions are very aligned with what the teachers of Ontario would expect of us and behavior-wise.
U.S. regulators have cleared second booster doses of COVID-19 vaccine from Moderna and the partnership of Pfizer and BioNTech for adults 50 and older. Right now, we have got Pfizer shares down by 1%. Its German partner BioNTech, its ADR is up by 4%. Moderna out of Cambridge, Massachusetts, up now by 4.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie read it. We read it. It is among the most read on the Bloomberg. It's also the Bloomberg Big Take. It is a story about a plastic bag's 2,000-mile journey and the truths about recycling revealed in this story.
Kit Chalel is senior writer for Bloomberg News. Kit joins us via Zoom from London. Kit, I can't stop thinking about this story, and when I was reading it this morning, I kept asking colleagues, wait a second, what is the tracking device that you put in a plastic bag to actually be able to track its journey, not just over thousands of miles, but over a really long period of time? So let's just start at the beginning. What was the question you were trying to answer?
The question I was trying to answer was, where does all our plastic go? The amount of plastic that we use in the world and the amount that's made and sold every year has been rising exponentially for years, and it's going to double again sometime in the next 15, 20 years. So it's actually an incredibly important question to ask is, where does all this stuff go when we've finished using it?
Can I just put out a number that you put out so wonderfully in your story? Global plastic production now reaches almost 500 million tons each year. That's a lot of stuff.
It's a huge amount, and it's something that we can see in our everyday lives. You know, if you go into your local supermarket or shop or service station, or you open your fridge or cupboard, there's plastic everywhere.
And China used to take a lot of the garbage, right? And then they stopped a few years ago.
We're not importing this anymore. Don't send us your trash.
That was the old solution to unwanted plastic. Was they used to get shipped to China, but in 2017, China said we're not going to take this stuff anymore. So the global stream in plastic needed to find a new place to go.
Okay, so you took 3 tracking devices and 3 different types of plastic. You dropped them off at a place that was purportedly where you can recycle plastic. What did you learn?
So the place I dropped it was Tesco, which is the UK's biggest supermarket, has annual sales of about £60 billion. And across the whole of the UK, Tesco has put out these white bins inviting customers to return their soft plastic bags, carrier bags, wraps, to be recycled and turned into new products. And what I learned, to cut a long story short, was that the vast majority of this stuff that customers are diligently returning isn't being turned into new products for Tesco. It's being exported overseas. It's being burnt in incinerators, and not a huge amount of it is being recycled.
Is part of the problem, and help me out here, I mean, I guess the good of plastic was kind of how durable and how lasting it is. The bad of plastic is how durable and lasting it is.
Yeah, that is the issue. Plastic is a wonderful material, particularly for selling food in, because it's impermeable to water. You can seal food products in an airtight way, and it doesn't degrade. It actually is a very safe way to package food. But that same durability is a big problem when it comes to disposing of it, because if you just bury it or leave it, it takes thousands of years to degrade. And throughout that time, it breaks down into tiny little small pieces, small chunks of plastic called microplastics that get absolutely everywhere. So it's not a great situation.
They've talked about this in the ocean, right? In particular, that you're seeing those,
Microplastics.
And as a result, you think about the food chain, right? Whoever eats it in the ocean and then we eat.
Yeah, that plastic
comes back to all of us.
Hey, Kit, I want to talk about the lentil snack pouch and where exactly it went. So it quickly went to Harwich International Port, then the outskirts of Rotterdam, then through Germany, past Berlin, and then it found its way to Poland. Where did it end up in Poland?
Yeah, so two of my three trackers made their way to Poland. They both went to exactly the same place, which is a small town called Zielona Góra, which is close to the border with Germany. The reason all this stuff gets sent to Poland is, quite simply cost. It is much, much cheaper to dispose of plastic in Poland than it is to do so in the UK or Germany. Labor is cheaper, landfill is cheaper, and it's just a cost-effective way for big retailers to get rid of their plastic. But of course, there's the environmental cost of shipping it there in the first place.
So I do think we've only got about 45, 50 seconds left here. So net takeaway in terms of plastic, is it just a case we have to stop using it, or is there a way to actually reuse it so that we can get rid of some of the economic, impact, and not economic, environmental impact?
I think what we learned during this story is we're not saying plastic recycling doesn't work, but we're saying it can't be the only solution. There's so much plastic that can't be recycled. So what we need to do is better understand how that process works. But we can't just ship it to overseas to make it someone else's problem. That's making the situation a lot worse. We need to really understand how these systems work.
Are you hopeful that we figure it out soon?
There's a lot of attention on plastics now, which is a really good thing. Governments are looking at it. I'm not particularly hopeful, knowing what I know about what happens to plastic when we throw it away. I'm not particularly optimistic for the short term.
All right. Well, listen, it's a great deep dive. It's really educational for everyone who reads it. And we're so happy that you were able to come and talk with us. Kit Jalel, he's senior writer at Bloomberg News via Zoom from London. Makes me not want to use...
I'm thinking about every piece of plastic that I use after reading this story.
We definitely, as a family, have been stepping away.
Well, from London to Washington, D.C., we go to check world and national news with Nancy Lyons. Hey, Nance.
Hey, Tim. It may be the first major concession from Russia since its invasion of Ukraine more than a month ago. After talks today in Istanbul, Russia says it will sharply cut back on military operations in Kyiv and Chernihiv and is willing to consider a meeting between Presidents Vladimir Putin and Volodymyr Zelensky. Bloomberg's Maria Tadeo reports Zelensky's been pushing for that all along.
For a very long time, the idea was that Russia did not or would not want to sit down with Zelensky because Russia believed that he was an actor, that he was a clown, that he carried no weight here, and that Russia would only speak to the big powers of the world. So that is now changing.
As for the drawdown near Kyiv, Bloomberg's Maria Tadeo reports that may be a reflection of conditions on the ground. Budget Director Shalonda Young has been defending President Biden's spending proposals before the House Budget Committee today, with reactions split along party lines.
Democrats cited strong economic growth. Ranking Republican Jason Smith focused on a different statistic.
Inflation is at a 40-year high. This proposal over the next 10 years increases the national debt.
You see this budget bring down deficits. We grew the economy the largest rate in 40 years. With that came higher levels of inflation.
Republican Trent Kelly.
There's a 525% increase in the EPA while there is a decrease in defense spending.
When you see the National Defense Strategy, this budget is aligned with strategy.
Subcommittees will be hearing from cabinet officers on their slices of the budget. In Washington, Irv Chapman, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Hey, Nance, thank you so much. Carol Master, Tim Stanovic here. And a story that caught our attention talks about the battle for your toilet paper roll has billions up for grabs.
Yeah, early in the pandemic, remember this, Carol, just 2 years ago, I think a lot of people were struggling.
I remember when I
find...
ran out.
Well, I thought you guys had some stashed in the basement.
No.
Okay, you guys ran out.
We actually ran out of the stash in the basement.
Okay. I know. I remember, finding some old rolls in our apartment and giving them to my neighbor below.
It's like gold.
Yeah.
That's crazy.
He still owes me for that. Out of necessity, though, millions tried rolls made from recycled paper or bamboo, and what they found surprised them. These alternatives were actually soft, far from the sandpaperish versions they grudgingly used at their office or in a public restroom. The revelation is shaking up what has been a stable and even boring category that racked up about $10 billion at U.S. retailers last year.
That's real money. Purchase patterns for toilet paper have historically been simple and lucrative. Shoppers found a brand like Charmin. You were Charmin family, you were this family, and then they bought it like clockwork every few weeks for years, even decades. But all those empty shelves made shoppers, like myself, reconsider a product that had barely been given a second thought. That opened them up to some of the emerging brands that are out there, some backed by VC, venture capital firms, making claims about softness similar to those that had dominated the category for half a century, while adding a benefit for this era's saving of the planet, right? I mean, disruption in toilet paper.
One of those companies is called Cloud Power. It's a startup. It was founded back in 2019. A couple famous investors, Jeff Bezos, Robert Downey Jr., you might have heard of them. They saw that its core business of supplying companies dry up early in the pandemic, and then they shifted to selling its tree-free bamboo option directly to consumers on the web. Revenue boomed, and the company has since shipped more than 2 million rolls across America.
Now these alternatives need to show that they can sustain the momentum as COVID fades, the masses return to some normalcy and possibly their old ways. In-store sales of toilet paper surging at the beginning of the pandemic. They've since slowed, according to data from Nielsen IQ, not because people aren't using it, but just
they're not
because
buying as much.
They were stocking up.
There used to be those signs, Carol, there was maximum of 2 packages or 1 package per customer.
We got a solution for them.
We're talking the bidet.
We're talking the bidet. All right, you are listening to Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, we've got the Dow, the S&P, NASDAQ all advancing. S&P close to session highs, right to the numbers with the S&P up 46 right now, up 1%. The Dow up 260, up by about 0.8%. NASDAQ up 241, a gain there of 1.7%. Stocks are rallying amid optimism for progress in talks between Russia and Ukraine. Benchmark Treasury yields retreated, while a key segment of the curve inverted for the first time since 2019. 9 of 11 major industry groups in the S&P are higher. 10-year yield 2.40%, 2-year yield 2.36%. Spot gold down now by 0.3%, $19.16 the ounce. West Texas Intermediate crude down 1.9%, $103.95 a barrel on West Texas Intermediate crude. Among the names reporting after the closing bell today, Micron Technology, ticker MU. Shares higher now by 2.4%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, got to say, a few years ago, I was doing some research, got a bit schooled on how much the global pharmaceutical industry relied on India for manufacturing supplies. And if you add that on to what we saw during the pandemic, we all kind of got schooled, Tim, on global pharma supply chains.
You were way ahead of the curve. I got schooled during the pandemic when I realized that we weren't just relying, on China for PPE, but on India for pharmaceuticals. Anna Edney writes all about it, healthcare reporter for Bloomberg News. She joins us on the phone from Washington, D.C. Anna's story will be featured in the upcoming issue of Business Week magazine. You can read it now, though, on the Bloomberg terminal and at Bloomberg.com/businessweek. Joel Weber is editor at Bloomberg Business Week. He's with us in the Bloomberg Interactive Brokers studio. Joel, so what is the United States doing in order to decrease its reliance on India at a time, not just, when we're still getting out of a pandemic, but relations are fraught between Russia and the West, which could be an issue when it comes to getting drugs from India?
I mean, the other thing that I'll just also preface here is that I had just long assumed that China was where most of our drug supply came from. So
we got to do inactive ingredients versus active ingredients, right?
Sorry, we'll get into the nuance of it. Touche. But that was the big surprise for me when I read Anna's story, which is based on some data dive that has previously been unreported until now. And so the initial surprise to me was just like, India. Yeah. But then, you bring in some geopolitics and it's like, wow, this is going to be an interesting dynamic. Everything has been outsourced. How does America get some of the ingredients back that it could be manufacturing domestically to take back maybe some of its drug supply chain? So, and I'm curious, what element of that reporting surprised you the most?
You all were talking about China versus India, and what surprised me is several years or longer decades where the FDA as well as lawmakers have been talking about China and India and how they supply active ingredients for our drugs in kind of an equal way. The FDA has put out a little bit of data, did not go nearly as deep as the U.S. Pharmacopeia group, but it made it look like they were a little bit more on equal footing as far as providing active ingredients go. And that was what surprised me. I mean, India just by far has a vast amount of the large factories that are making these active ingredients that go into the U.S. market.
So explain, in terms of active ingredients, this is what the core of so many pharmaceuticals that maybe we take for granted.
Yeah, this is, the key material. This is the key chemical that you need in your drug to make it work. So, if you're taking Tylenol, you'll see, it's also called acetaminophen, and that's the active ingredient because that's what's actually making your headache go away or your pain go away. There are inactive ingredients that go into it that may mostly probably bind it and things like that, or help with an extended release if that's the kind of drug it is. But the active ingredient is basically what makes it work.
And I'm curious, as we're thinking about the geopolitical backdrop that has suddenly emerged, and the India's being more closely aligned than with Russia than maybe a lot of people expected. Like, how hard would it be to bring the production of these active ingredients back to the U.S.?
That is extremely difficult. The drug makers don't really, they're perfectly comfortable relying on India. It's cheap, and that's where they want to go. And so, incentivizing them to come back in some way, federal incentives, helping prop them up with expanding factories they may already have here, is probably one of the few ways that it's going to happen. But even then, if a company decides to build a factory here or expand something, it can take several years to get that going. It's not just like flip the switch, we had this production line lying around. It has to be very specific to the type of drugs they're trying to build and things like that. So this information that U.S. Pharmacopeia has could help push that effort a little bit, given that everything is so concentrated there. Even when it was split, when people thought it might be split between India and China a little more, not great for a lot of reasons, but at least there might be a little more diversity. This is showing that it's coming from one area, and that even raises a lot more eyebrows.
Yeah, and a really startling figure in here. Of the 100 drugs that Americans use the most, you write, 83 have no production source in the U.S. for their active ingredients. That's according to somebody, a senior researcher at the Center for Analytics and Business Insights at WashU in St. Louis. So you mentioned potentially government involvement here. Is that realistic for us to think? Because I got to tell you, 2 years into this, almost three, entering the third year of the pandemic, it does feel like this is, at least on its surface, a national security issue.
Right, and the Association for Accessible Medicines, they're the ones who are the lobby group for the generics. And really the drugs we're talking about here are generic drugs. A lot of the brand name drugs are going to Europe and for their active ingredients. They said they have been in talks with the Biden administration. The administration's been looking at the supply chain of a lot of different things, given just what's happened during the pandemic, and pharmaceuticals has been one of those. So they are in talks. Under the Trump administration, there was some money that went to a company in Richmond, Virginia, to get kind of started, so they could try to make COVID drugs domestically, called Flow. But that's just one company. It's not the whole solution.
Just another thing to add to our worry list.
Yeah, I thought PPE was the worry, right?
Oh, my God. Anna, thank you so much for bringing us the story. Anna Edney, she's healthcare reporter at Bloomberg News. This story is going to be in the upcoming issue of Bloomberg Businessweek magazine out later this week. It's on the Bloomberg and at Bloomberg.com. Our thanks to her, as well as Jill Weber, editor of Bloomberg Businessweek.
March is Women's History Month, and every day this month we're celebrating significant moments in women's history. Now with your installment for Tuesday, March 29th, here's Bloomberg's Renita Young.
On this day in women's history in 1993, Catherine Colbeck becomes the first woman elected as premier in Canada. She led Prince Edward Island and was among female pioneers in Canadian politics. Despite growing up hearing politics was not a place for women, Colbeck successfully ran for office in the House of Commons in 1974, serving for 4 years. For a decade after that, Colbeck worked in her family's hardware, building, furniture, and appliances business, returning to politics in 1988. Although 2 other women reached premier status before her through party or legislative selection, Colbeck was unique because she became the first woman in Canada elected premier in a general election. That's Today in Women's History. I'm Renita Young, Bloomberg Radio.
A big thank you to Renita Young for this installment of Today in Women's History. Coming up, we're counting you down to the close. Stocks are surging with the Dow, the S&P 500, and the NASDAQ all higher. This is Bloomberg.
countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close. Just 60 minutes left in your trading session. Caroline Hyde, Romain Bostic, Taylor Riggs, joined now by our colleagues Carol Massa, Tim Stenovic, as we go cross-platform, TV, radio, YouTube, to dissect what is a rally on our hands, up 1.7% in the tech area, and actually volume surging there too, Carol.
Yeah, so some conviction behind those moves to the upside. I've been looking at some domestic data. We got some data on U.S. home prices coming in better than forecast, a couple of reports, and those home builder stocks, they are definitely rallying in today's session, up nearly 4%, Tim.
I'm keeping my eye on shares of Apple. It's up for an 11th day in a row. If it closes higher today, it'll be the longest winning streak since 2003. That, if you think back to 2003, it was 4 years before Steve Jobs stood up on that stage and unveiled a little thing called the iPhone.
Just a little thing.
Are we on $3 trillion watch yet for Apple?
I am. 2.91 trillion for our TV audience, our radio audience. We're currently seeing the market cap of Apple. Meanwhile, let's take a little look at what's happening in the benchmarks, because thanks to Apple, big tech really helping out today. 1.7% higher, let's call it, 241 points to the upside on the NASDAQ. In fact, the NASDAQ 100 had been up more than 1.5% and reaching its high since January 20th. We're seeing the S&P 500 up more than a percentage point too, up 46.24 points. We're looking at, though, some of the cyclicals not doing quite so strongly. Dow Jones Industrial Average is your laggard of the day, up 0.75%. That's 250 points higher. But shout out to the Russell 2000, 2.5 points higher, 51 points to the up. Taylor.
You know, Caroline, we know that Romain will keep me honest if this is indeed not broad-based, but from a pure sector level, it certainly seems to be the case, though you do wonder if there's sort of a rotation within this sector underway, because down at the bottom, energy continues to be the underperformer. That's the only sector in the red. You're off about 1%. Same with financials. Now, remember, those are the two best performers or so on the year. So that rotation, at least on the day, is out, but towards the top of the screen, Romain, it's real estate, it is technology, and it is discretionary firmly in the green.
Well, today certainly a little bit more broad-based than what we saw yesterday. Obviously, names like Apple are providing a big boost here. You're looking at 178.38. That's a significant milestone here, because we talk about that all-time high that Apple hit back on January 3rd of 182. Not far off that, just about 2% below that all-time high. And actually, we should point out, with this gain of about 1.6% here on the day, that actually gives Apple a year-to-date gain. It's only about 0.4%, but still a significant milestone for a stock that, of course, there was in correction territory just a few weeks ago. Now, some of the names, of course, that had rallied on the back of that invasion into Ukraine, like Cheniere Energy, Archer Daniels Midland, and some of those fertilizer stocks, all down here on the day. And an interesting story with Nielsen Holdings. Remember, was it Elliott and Brookfield? Had made a bid, at least said to have been made a bid for about $25.40 a share. That was rejected by Nielsen. They've come back to the table with a $28 bid. That's according to Dow Jones, and it looks like that might go through. Those shares higher by about 21%.
And maybe, I wonder how they'll be structuring any sort of M&A. Are they doing it in cash? Are they doing it in, debt? We're certainly starting to see the repricing of debt. But what's really interesting is whether you rally in bonds and yields go down, or whether you pull back in bonds and yields go higher. We've got a flattening yield curve no matter what seems to occur. Today, we've been selling off, and now have actually a bit of a rally in bonds, and we currently see that yield curve at one point, all importantly, inverting. It went negative, now bouncing off of that for the 2s, 10s. But is that a recession call for you, Carol?
I don't know. Not negative. So how long does it have to stay in negative territory for it to be a recession? Is it like 10 minutes or?
Well, that's what we were just talking about, right? How deep it goes, how long it goes, and does that impact what kind of recession? Cool. I'm all about the hand gestures on radio. Works really well.
Yeah, I mean, as Katie Greifeld pointed out to us earlier in the day, the yield curve inverted back in 2019 before anyone saw the COVID pandemic coming, and indeed we hit a recession in 2020, but it was because of the pandemic.
Well, yeah, but this raises the whole issue about the signals that it sends. Everyone says, oh, we inverted, and of course we did end up in a recession, but we didn't really end up in a recession for the reasons that people thought we were going to end up in a recession.
No, that's a really good point, right? Yeah. And it was pretty quick, right? We bounced back once we saw all of that stimulus come out. Well, Bill Dudley, I think we're all a pretty smart group. He's a really smart individual, former member of the FOMC, vice chairman, former head of the New York Fed. He's a Bloomberg opinion columnist, senior advisor to Bloomberg Economics. So we talk to him a lot. He's got a, what?
It's a lot of titles.
It's a lot of, I know, I had to put it out there. I like full transparency. Anyway, he joined David Weston earlier today, and he said, theoretically, we could avoid a recession, but if you take a look at what the Fed's doing in terms of getting more aggressive, the reality might be a little bit different. Check it out.
They're just beginning to start to tighten at a time that inflation's way above their target and the unemployment rate is low at 3.8%. And Powell has characterized the labor market as extremely tight. In that situation, if you're going to try to get inflation under control, you're going to have to push up the unemployment rate. And if you push up the unemployment rate, it's almost impossible to avoid a recession at that point.
All right. Of course, that's Bill Dudley, former head of the New York Fed, former member of the FOMC, and of course, a Bloomberg opinion columnist. But you do think about this, right, guys? We have gotten into this conversation about if the Fed is too aggressive, what it could do. The Fed has essentially got to give up some of the gains that we've seen in the unemployment rate. What might that do in terms of sentiment and growth going forward, Tim?
Yeah, and I think what's so interesting about this is the idea that we get the employment report coming on Friday, so we get to see, what many analysts are saying is going to be another strong labor report. And we hear from CEO after CEO after CEO that it's still an incredibly tight labor market. So what could the Fed do to actually disrupt that?
We saw that in the JOLTS data this morning.
Yeah.
Caroline, we saw that in some of the consumer confidence data. I know that we were chatting about that earlier. What's so interesting is the face of the consumer resilience in the face of those record inflation year ahead 1 year expectations of, 7.9%. That's pretty incredible.
Yeah, and how much we can continue to rely on a consumer that's willing to spend into these sorts of price hikes. But also, this is a global inflationary pressure, and how much does, therefore, if we do see, we all hope, a lessening in the atrocities that's occurring between Russia and Ukraine at the moment, and indeed some of the tension and conflict there, would that mean some of the inflation risk coming from food inflation, for example, the metals, the oil that we've seen baked in because of Russia-Ukraine, does that dial back a little bit?
I think, the transitory part of this obviously is tied to the commodity space and energy prices. And yes, that part is transitory. But we've heard from Jay Powell and a lot of other members of the FOMC that have made it clear that there are structural issues that they have to tackle here that aren't transitory and that, frankly, might not necessarily be solved or resolved by raising rates.
Well, and this just reminds us all of the questions that are out there. I know we say this a lot, too, but I feel like every Fed meeting, they're going to have to look at what's going on. And especially as the Fed becomes more aggressive in terms of tightening, that does take a while to work its way through the economy. The Fed doesn't want to overdo it so that if indeed we do go into a recession, it's not deeper and longer.
But they're not even underdoing it. You had Bullard
it's
out
not
today
an exact science,
with an essay basically saying that he's in favor of going above 3% on the Fed funds rate this year.
But is he right?
I don't know.
Right. That's the point, right? The range.
You're the one wearing the turtleneck. Tell him.
It's really cold today.
What does that mean?
Makes you look smart.
So good.
Take it as a compliment.
I'll take it as a compliment.
Do you like Romaine's new Parisian bow tie, meanwhile?
I was going to say, yes, I do. I'll take it from a compliment from the man in the bow tie. All right, folks, we're going to continue our conversation in less than an hour time. We will be back on radio, TV, and YouTube. We will count you down to the close on the Yes, It's Only Tuesday Lemon.
And here on this Tuesday, we continue to count you down to this close. Today, we're taking a look at Uber. Uber announcing a new global strategic partnership with BP to drive delivery growth, aiming to have more than 3,000 retail locations available on Uber Eats over the next 3 years. Bloomberg Technology host Emily Chang is in Las Vegas at the Shop Talk conference right now with an exclusive interview. Emily, take it away.
Romaine, thank you. I'm here with Uber CEO Dara Khosrowshahi. We just got off stage where you talked about this vision for Uber to be, quote, the anti-Amazon. So including this new partnership with BP, this idea that Uber could deliver anything, not just food, in this vision for the future. Can you explain how you're going to do this? How do you take on Amazon, which is such a logistical powerhouse?
Well, I think that Amazon is an incredible company and no one is ever going to replace Amazon. But we can essentially use our technology, local logistics capabilities to power the local merchant or restaurant to deliver anything within an hour, which we think is a delightful experience. You think about on-demand. On-demand completely revolutionized transportation. It completely revolutionized e-commerce. And on-demand is going to revolutionize local commerce. We want to partner up with merchants, restaurants, essentially, to help them power their own local commerce solutions.
So you have rides, you have eats, you have don't eats. Now,
yes, exactly.
Is this a super app vision shaping up?
Very much so. So what we're doing essentially is building the largest local commerce and transportation platform on earth. The users, riders, consumers get the ease of essentially being able to go and go anywhere, get anything, same ID, same payments, etc. We know the locations that you like to go or restaurants that you love. Earners essentially get to earn in many different ways. Do they want to drive a person? Do they want to deliver food? Do they want to shop, etc.? So more flexible earnings opportunities, and partners such as merchants, whether they're one of our restaurants or a Walmart or Sephora, get to reach our global audience through our marketplace or through our logistics tech to help them power that on-demand within an hour delivery.
So let's talk about those earners. Drivers are really feeling the pain at the pump, and Uber drivers especially. How much higher do you think gas prices will go, and for how long?
I'm hoping that with the early signal of there being some kind of a light at the end of tunnel as it relates to the situation, the terrible situation in Ukraine, we'll have some relief, or at least things won't get worse. I think the good news for us is that earnings for our earners are at significant highs. For example, in the US and Canada, our earners are earning an average. This is an average of $31 an hour. Those are pretty robust earnings. But the pain of the pump is hitting everybody, and especially our drivers.
And I know you've added this fuel surcharge, but drivers say, some of them, it's not enough. You have drivers protesting at your New York offices today. Will this surcharge go up with gas prices, and will it continue beyond May 11th if gas prices are still high?
Well, we were the first in the industry to move on the surcharge. And we moved on the surcharge because we thought it was the right thing to do, and it helped cover the majority of the increase in fuel prices, admittedly not all of the increase in fuel prices. In May, no one can predict where the world is. We're going to look at the situation, and if the situation doesn't change, we'll certainly consider continuing the fuel charge, or whether it's an increase or a decrease, who knows. We want to be there side by side with our earners and help them make a great flexible living.
Would you consider lowering your take rate or increasing theirs?
Generally, our take rate is lower now than it has been historically. And over the long term, we essentially want to earn a fair profit. And we're doing everything that we can to drive automation and efficiency of our own system so that we can put as much of the dollar that, let's say, a rider spends on an Uber to put it in our earners' pockets. The more money we make, the more money they make.
So you've got gas prices at highs, inflation at 40-year highs, a new variant that's potentially more contagious. How is this impacting supply and demand?
We're not seeing any kinds of impacts on supply and demand. Demand, we continue to hit records as it relates to mobility and delivery and our commerce business that we're talking about here. So it really isn't showing up in the business. Earners growth continues to be very significant. More earners are feeling safe. They're coming back to the platform. Everybody wants to get out of the house. And so we're not seeing any kind of a signal at this point that would indicate something is going the wrong way. But we have to be hyper vigilant. And I think for us, we're benefiting from this secular trend, on-demand transportation, on-demand delivery of anything. And as a result, I think we will be relatively resistant to whatever happens, in the broader economy.
You mentioned we're at post-pandemic highs for rides. When do we get to pre-pandemic highs?
It's going to happen sooner than you think.
This year still?
Definitely.
Okay. Now, I want to talk about the war in Ukraine. I know you work to pull a number of employees out of Ukraine. You've been offering free rides, especially at the border. What is the status of your service and your employees in Ukraine right now?
So we are, our employees who wanted relocation have gone relocation. We're tracking them and their families. That comes first. Second, we are running our systems in the towns that the government wants us to run them. And we're actually now plugging in our Uber Direct, which is our logistics technology, to be able to power the UN to carry food around. And at the same time, what we're doing is we're raising money for Ukraine. We've raised over $2 million through kind of donate buttons. It's incredibly easy to use. And the donations have poured in a way that we never expected.
Now, you do still have a stake in your joint venture with Yandex. And I know you've had Uber execs resign from the board. You've said you're working to accelerate the divestment of that asset. But when you open the Uber app in Russia, you can still call a car. Why is that?
That is essentially a skin, so it's only branding of our technology. There's no Uber technology being used at all. It was part of the original transaction. Uber is a very big brand globally, including in Russia as well, but we don't directly touch that in any way, shape, or form.
So What's the progress on selling off this asset? You know, how far are you willing to go? Because who's going to buy a Russian ride-sharing service right now?
I think right now everything's on hold. So we have stated the intent to sell. We will sell as soon as reasonable. I think right now the fact is people are much more focused on humanitarian aid, resolving this terrible situation in Ukraine, and hopefully then moving forward with some semblance of normalcy. Then we'll look up and see what we can do. We already divested about $1 billion out of that business. So this is something that we had thought about earlier. It's not something all of a sudden that we thought about in this context. And we'll look to conclude the divestiture as soon as reasonable.
Uber shares are down. DoorDash shares are down. Instacart just lowered its valuation by 40%. How long do you expect this market downturn to last? And what are you bracing for?
I don't think you can predict the market. That's certainly not my job, right? My job is to run a business. And I think that we, as a company, have made the pivot to profitability. Remember, we promised EBITDA profitability last year. We hit it earlier than our promises. We've said we're going to be free cash flow profitable this year. The mainline Uber mobility business, the delivery business, Uber Eats, and the freight business, all of them are going to be profitable as it relates to EBITDA. So I think relative to our competition, we made the pivot to profitability sooner and at a scale. And I think the reopening for us is going to be a much bigger tailwind than, let's say, some of the other delivery players that we're competing against.
Big milestone in London. You signed
Thank you.
a new agreement with TfL, 2.5-year extension, which is a big deal because they rejected your last two requests, I believe. Also committing to full electrification by 2025. How are you going to do that?
Well, we committed to full electrification quite early. And every single ride in London, essentially, we take some amount of that ride, put it into a pool to help drivers in London move from gasoline-powered cars to electric cars. So this has been, it's part of Mayor Sadiq Khan's vision. We loved that vision. So we have been working on electrifying our fleet, and we're going to get it done.
You just got New York City cabs on board. I don't think anybody thought that would ever happen. Who's next? Is it San Francisco?
We're certainly talking to many cab companies out there. This is actually a product that we built outside of the U.S. We've been at it for years. We have over 100,000 taxi cabs on our platform, benefiting from the demand that the Uber platform and the services and the earnings that Uber brings. And this is just an extension of that same technology that we're building. Super excited about New York. And it will be followed up, hopefully, with many new announcements in many new cities.
Labor Secretary Marty Walsh said last year that he thinks some gig workers could be or should be classified as employees. It's been reported that you've had conversations with him that have been productive. When's the last time you spoke with the Secretary of Labor or the Labor Department? And what progress have you made? What is his view on gig workers?
You'd have to ask him his particular view. My conversation with him was last year. And the Secretary really listened. I think he really wants to learn about the benefits of gig work and, some of the issues with gig work. We don't think this world of having to make a choice between flexibility of earnings, which is the number one reason why drivers, couriers engage on our platform. They do not want to be employees. We don't think there's this kind of false choice between flexibility and benefits and earnings. We can have both. And so the dialogue that we're having, you saw it in Prop 22 in California. It was an outsized winner with voters. All of our earners wanted. I think that the Department of Labor is listening, and we're hoping we can get to this win-win, which is flexibility and benefits.
We're here with Dara Khosrowshahi, the CEO of Uber. Just want to remind our Bloomberg television and radio audiences, I have to ask if you've seen Super Pumped, Showtime's new series, which documents issues with cab drivers and government in great detail. Have you seen it, and what's your rating?
I have seen it. It's not at the top of my streaming list, but I will consider it homework. And sometimes watching that stuff feels like work. I'll tell you, we've changed as a company. There's a ton of innovation in that company. Uber, redefined on-demand transportation. But the culture changes that we have driven hit home even more as I watch that show.
I saw you out there. I saw some pictures of you working at Papalotes.
Yes, absolutely, and Chili's.
Working with some of the merchants on Uber Eats. What did you learn from that?
One of the things that I've learned.
Help them with the challenges that they're facing and they say they have?
Absolutely, and I've delivered too. I've been a bicycle delivery person in San Francisco. You know, the work is just, it's harder than you expect until you realize it. The person behind the counter has to juggle all kinds of things. There are orders coming in from Uber Eats and DoorDash, and then putting it into the system, making sure that you're caught up with the kitchen, dealing with, giving great service to people who walk up. There are less of them than I expected. There are many more delivery orders relative to walk-ups, but it's just impressive what these men and women are doing every single day. You got to be on your toes. You have to be smart. You're an entrepreneur, and kind of making it all happen in partnerships is something that I loved seeing. And, our tech is good, but it can get a lot better.
Speaking of that, last time you were here, you said Uber will absolutely accept crypto someday.
Someday.
Any more details on that?
I think the last time I saw it was a month ago or so. So we will. I think crypto, like right now, I think we talked about it. It's demonstrated to be a real store of value, but it has not yet demonstrated its utility in terms of exchange of value, efficient exchange of value. Our average trip is a $15, $20 trip. So we need crypto to become more efficient. We're certainly looking at all choices. But if you ask me the same question a month from now, I think the answer is going to be the same.
So let's go to 5 years from now. Paint this vision for Uber 5 years out. How different does Uber look? Is it a super app? Is it truly the anti-Amazon? And how profitable is it?
Well, we absolutely plan to be a super app. And a super app not only for consumers, go anywhere, get anything, and anything is not just food. It's literally anything you want in your local city or town. But also for earners, we can be a super app. How do you want to earn? When do you want to earn? Where do you want to earn? We're going to be giving you more earnings opportunities than anyone else. Our earner app is a super app. It's literally one app, and we can give you any and all opportunities. So I have to tell you, I'm just as excited about the earner-facing innovation and all the choice that we're going to give our earnings as I am being the super app that consumers also interact with.
And how many delivery players have survived by that point? How much consolidation will there be?
There has to be consolidation in the field. Like, not a single transportation or delivery player outside the U.S. is profitable now. And this is a business that's been around for 10 plus years. So we are that company. We're profitable in the U.S., both in mobility and delivery. We're profitable internationally, both in mobility and delivery. We're going to hit free cash flow profits. We gave a target of $5 billion in earnings in 2024, but that's just the beginning. We plan to be growing top lines very quickly with incremental margins, and I think we are going to show separation from a lot of other players who haven't been able to demonstrate both top line and bottom line growth.
Uber CEO Dara Khosrowshahi, great to see you again.
Great seeing you as well.
Thank you for doing this, folks. I'll send it back to you.
All right, Emily Chang, thank you so much there. And our Emily Chang with the Uber CEO, who gave a talk earlier at that Shop Talk conference where Emily is. And he talked about fulfillment technology to retailers, that they can out-Amazon for local commerce. So it looks like looking for some new revenue streams, kind of building out their infrastructure.
Yeah, I mean,
network.
think about the publicity push they have since the Super Bowl, right? Announcing not just Uber Eats, but trying to say they have Uber Not Eats and ordering things that essentially you'd purchase from Amazon using Uber's fulfillment network. The CEO obviously really bullish on that.
Right, like you've already got drivers out there. So what's the jump from going from food to other items? So talking about that, says robots and automation augment people. Again, this was in the speech given earlier at the Shop Talk conference, but you were looking at the Uber share price, weren't you?
Yeah, shares of Uber higher by 7.2% today, but they've just been getting beat up, Carol. And like Emily said to Dara Khosrowshahi, and Khosrowshahi is saying essentially there's not one delivery app out there that's profitable right now. And it's something that you and I were talking about during the break, because if you think about the technology that's actually used, right, these are gig workers, right? They're independent contractors, so they're not on Uber's payroll per se. Uber has that take rate, and Khosrow Shahi just now saying to Emily Chang that it's lower than it has traditionally been at this point because they need to attract and retain drivers.
Right.
But when do these companies get to profitability?
I'm trying to understand, and I'm looking at the FA function on the Bloomberg. I mean, the last year-over-year revenue growth, you were looking at, 52%. Earnings were up about 60% year-over-year. I'm just trying to, understand, right? They do have a lot of technology costs, and as you said, they're trying to get access to drivers in a very, very competitive labor market. There was also the news, right, that they're going to start listing New York's yellow taxis on its app, so that gives them another line into drivers already out there, right?
Good for the driver shortage.
Right?
And good for yellow cabs, too.
Right, so hopefully for consumers. Exactly. Hits on a couple different points. All right, you're listening to Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
What are you addicted to?
So we're talking about Instagram and competitors to Instagram.
Come on,
and
you're
I'm just,
among friends.
I know. I've been in this hole with the reels. It's like the Instagram copy of TikTok. And it has, this algorithm, so it knows what I like. And, I love aviation and watching videos of airplanes. So it's like every time I scroll through, it's like airplanes landing, taking off. It's pretty cool.
Your wife's like, honey, can you take care of the kid?
Oh,
and you're like,
yeah.
I'm
She's
busy.
like, turn that off.
All right, we're going to get to a great story about an
We're
Instagram
talking about this
rival.
for a reason.
Yeah,
Okay.
it's a new, it's taking over college campuses. Just hang around, be patient, we'll get there. But first up, we got to get to Charlie Pellet with a check on the trading day. Hey, Charlie.
I share Tim's.
I know you do.
We go and hang out and talk about planes.
No. We should hang out and watch TikTok videos separately and not talk to one another. But I got to tell you, I watched this video the other night of a plane landing in Alaska with 0 feet for touchdown.
I saw the same video.
Oh my God,
it
you
is,
too.
It is unbelible watching planes land and take off.
nerds.
But again, 0 feet for takeoff or landing, which sounds unbelievable.
Nobody hurt?
No, it
landed.
It landed. That's the whole thing. It was unbelievable. Anyway, let's talk about markets because it is a big deal today. We're trading at the best level of the day right now. The Dow, the S&P, NASDAQ all pushing higher with the S&P up 56 right now, up 1.2%. Bottom line here, stocks higher for a fourth day. 28 minutes to go ahead of the close. Got to keep it locked into Bloomberg Radio to see how things shake out. And of course, catch up with Daybreak Asia tonight to see how Asian markets react. We've got progress for talks, optimism about progress in talks between Russia and Ukraine. Benchmark Treasury yields are retreating while a key segment of the curve inverted for the first time since 2019. 10-year right now, 2.40. We do have the 2-year, 2.36. S&P up by 1.2%. The Dow up 323, up 9/10. NASDAQ up 279, up by just about 2%. Uber CEO Dara Khosrowshahi says inflation is not having a material impact on Uber's business. He also says Uber delivery and ride demand remains higher, even with those higher prices. He made the comment in an interview heard right here on Bloomberg Radio.
We're not seeing any kind of a signal at this point that would indicate something is going the wrong way, but we have to be hyper vigilant. And I think for us, we're benefiting from this secular trend, on-demand transportation, on-demand delivery of anything. And as a result, I think we will be relatively resistant to whatever happens, in the broader economy.
And right now we do have Uber shares up by 7.5%. Crosstown San Francisco rival Lyft up by 7.2%. Briefly, avocado prices have jumped to the highest in more than 2 decades amid tightening supplies in Mexico.
What?
The world's biggest exporter of the fruit, signaling pricier guacamole. Shares of Mission Produce, which farms Hass avocados in California, they're up by 1.6%. That, my friends, let's talk airplanes. This is a Bloomberg Business Flash.
Well, maybe. All right, Charlie Pellet, thank you so much. So speaking of airplanes, this is definitely on our radar, maybe because it's kind of interesting when disruption gets disrupted. It's a story about why an Instagram rival, Tim, has taken over those college campuses.
Carly Wano wrote all about it. She's media, entertainment, and telecom reporter for Bloomberg News. She's with us now in the Bloomberg Interactive Broker Studio. Carly, it's a great piece. I never heard of Be Real before reading your story earlier.
Does that mean
today.
we're not cool?
That means, I'm a boomer, so.
I don't even want to tell you what I am.
So that's what, I'm really an elder millennial, which is, might as well just be a boomer when it comes to new apps. What is it? What makes it different than Instagram?
Sure. So Be Real, it's this new app. And what happens is every day users, once they download the app, will receive a notification at a different time. And they have 2 minutes to basically fulfill the prompt. So what you do is you snap a photo with your front and your back facing camera. It's taken at the same time. Once you're happy with it, you share it out to your followers. And the idea here is that it's kind of the more authentic form of social media, just in the sense that you get it at a different time each day, so you don't know when you're gonna get it. And because you only have 2 minutes, you can fix your hair, maybe pose, but you can't get yourself into a totally different surrounding. You have to share with your followers what you're doing at that time.
How popular is it?
It is really taking off on college campuses. I looked it up, and so many student newspapers have written about it. It was not hard finding sources to talk about it because the kids, they're all over it.
How many users do they have? Do we know?
So between January 2021 and February 2022, it had almost 4 million downloads globally on the App Store and Google Play, and about 30% of those came from February 2022.
Okay, so the road to success when it comes to social media is just littered with apps that don't get adopted and are not widely used, but also controlled by just a couple companies out there right now. So Facebook owns Instagram. That's a huge app. And Mark Zuckerberg has talked a lot about wanting to attract a younger demographic, i.e. TikTok users. TikTok is absolutely huge. Snap, of course. And what you've seen Facebook do, Instagram do, is copy those features from TikTok and copy those features from Snapchat. Could Facebook just copy what Be Real does?
In theory, yeah. I mean, I had one researcher who did say that if it keeps being popular, that might be a tactic other big social media companies do. The question is, does it have sticking power? Will it be something that transcends beyond just college kids who are all in one environment and like to keep up with their friends from school and home?
Just going to say, I roll out of bed on a Saturday morning and I get a notification, take a picture. Probably not going to happen. No, but it is interesting. And I do think, we talk about social media so much, Carly, and just maybe the pushback against how invasion it is and also how manicured it's become. You and I were talking, I kind of stay away from Instagram. I love it, and I've gone down rabbit holes of just these incredibly manicured Instagram accounts. But I'm feeling like, God, it would take so much work to make mine, look at as good. You do wonder, is there kind of a swing back? You follow media, you follow social media. Is there a point where people want to kind of be more real, more truthful on social media, especially since we've seen so many kind of lies and falsehoods over the last few years?
Yeah, and I think among young people too, they spend so much time on social media. I mean, I talked to one girl who said she might spend 2 to 3 hours on Instagram every day. I mean, this social media app, you can't spend more than an hour on it if you want to by just looking through your immediate friends. And also posting, I mean, you have 2 minutes to post it once you get notification.
Nice and quick.
Exactly. Whereas, I mean, Facebook or Instagram, I mean, you might spend 30 minutes just picking the photos that you want to use.
It's true. You hear this all the time.
Exactly.
We only have 30 seconds left, Carly. What does the company have to do in order to continue its momentum?
Yeah, it's a question of if they are able to do more than just one thing. There's these apps that often will become popular. They do one thing, they become trendy, and they fade. So it's a question of, will it get picked up by other companies, or will other companies kind of take over their idea? Will they add different features onto the app? It's all to be seen.
Just quickly, 15 seconds. Are they making money already, or is it just out there?
It's out there. I would have to imagine they're making money, but not entirely sure. They've gotten some VC funding right now from some large investors in the U.S.
And some well-known investors, right?
Definitely. Andreessen Horowitz, CST Global, stuff like that.
Mark Andreessen, early investor in Facebook, on Facebook's board.
Just to know, right? Just in case you were wondering. All right, Carly, thank you so much. Carly Wana, she's media, entertainment, and telecom reporter at Bloomberg News here in our Interactive Brokers studio. Are you in?
I'll give it a try.
All right.
Yeah. All right, let's get to Washington, D.C. for a check the latest world and national news. Nancy Lyons is standing by. Hey, Nance.
Thanks, Tim. President Biden says we'll have to wait and see if Russia is truly willing to pull troops away from Kyiv, where they face tough opposition. That was allegedly discussed during ceasefire talks in Turkey today. There are also reports Ukraine may be willing to commit to neutrality. The University of Cambridge professor Mark Weller, a former UN senior mediation expert, tells Bloomberg the Ukrainians were very daring to offer neutrality, one of Russia's goals with the invasion.
In simply saying, okay, we might be willing to become a neutral state, the Ukraine has removed one of the war aims, as it were, for Russia, and therefore increases pressure on Russia to consent to ceasefire.
Again, Cambridge professor Mark Weller. The FDA is authorizing a second COVID-19 booster shot for people ages 50 and up. That applies to both the Pfizer and Moderna vaccines. The FDA's Peter Marks explains why they went with age 50 and not age 65.
By choosing age 50 and up, which is often something we use for other respiratory viruses like influenza to consider those at higher risk, we felt like we would capture the population that might most benefit from this fourth booster dose.
The FDA's Peter Marks says they're granting emergency use authorization for a second booster as early as 4 months after the first booster. The NFL is changing overtime rules for playoff games. This season, if a team that wins the toss in overtime scores a touchdown, the other team will receive a possession. If both teams score in that first possession, it'll go to sudden death. The rule will only apply, though, to postseason games. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, Nance, thank you so much. Well, chief financial officers, they play a critical role in shaping corporate strategy and positioning organizations to meet future challenges. Bloomberg's new monthly program, it's called Chief Future Officer. Well, it profiles these leaders and explores the impact that they are making on their companies and their overall industries. This week, I caught up with Chipotle CFO Jack Hartung, and in this excerpt, Hartung explains how Chipotle is was navigating the pandemic.
The things that really got us through it is we stayed true to our purpose. So during each of these challenges, we made sure we invested in the things that made Chipotle special. Invest in higher quality food, invest in our people, and then invest in our growth and invest in things like technology. And the other thing I think is to make sure you have a strong balance sheet to make sure you can weather the storm. And we've had a strong balance sheet. We've never had debt. We've also always had more cash in the balance sheet than we need for our normal ongoing business. And that has come in, great, really handy.
All right, that was Chipotle CFO Jack Hartung. And you can see the entire interview, the broadcast. It's called Chief Future Officer. That will be tomorrow night at 9:30 p.m. Wall Street time on Bloomberg TV. What's interesting about Jack, and this is a company I have followed for a long time. I've sat down and done interviews with Steve Ells, who was the founder and longtime, leader of this
When you say
company.
long time, you mean like McDonald's era, right?
Yeah, McDonald's was the original investor and got out of it at the IPO. Jack Hartung was at McDonald's, went to work at Chipotle pre-IPO, and then has stayed with the company, has gone through financial crisis, also the crisis it had with its food, when really sales fell off a cliff, and then going through the pandemic. So he has seen a lot of the company, and it really is about reminding everybody who's there about the culture in terms of sustainability, how they produce food, how they acquire food.
Interesting to hear the comments about the transition to mobile ordering during the pandemic. Look,
They're prescient with that.
Yeah, our last meal, like at a restaurant on our way out of the city during the pandemic, was at a Chipotle. I remember downloading the app for the first time.
Isn't that interesting? And listen, they had invested big time in digitally so that when the pandemic helped, they were able to benefit from that. All right, check that out tomorrow at 9:30 p.m. on Bloomberg TV.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got 13 minutes to go ahead of the closing bell. The Dow, the S&P, NASDAQ at or near session highs. Stocks are gaining. The U.S. two-year yield briefly exceeded the 10-year for the first time since 2019, inverting yet another segment of the Treasury curve and reinforcing the view that Federal Reserve rate increases may cause a recession. 10-year yield right now, 2.40%. Two-year yield right now, 2.36%. S&P up 59, a gain of 1.3%. The Dow up 351, up 1%. NASDAQ up 284, up by 2%. Worth pointing out, year to date now, the S&P has narrowed its loss to 2.8%. Stocks higher for a fourth day amid optimism for progress in talks between Russia and Ukraine. We've got spot gold down 0.1%, $19.19 the ounce, while West Texas Intermediate crude oil is down 1%, $104.87 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg Editorial Board. The U.S. is facing a retirement crisis. About half of working-age households won't have enough resources to live comfortably after they leave the workforce. That's a looming disaster for them and a fiscal mess in the making. After all, the more people reach retirement without enough money, the more they'll depend on the social safety net. By 2030, seniors will require an added $7 billion in annual public assistance in New Jersey alone. That's almost a fifth of the current state budget, and the situation in other states will likely be worse. This week, the House is expected to consider legislation expanding automatic enrollment in employee retirement plans. That's a welcome start, but more is still needed. Above all, policymakers must be thinking seriously about how to get Americans to save more for their golden years. This editorial was written by the Bloomberg Editorial Board. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just about 10 minutes left in today's trading session. And it's been another interesting one, but we've seen definitely the risk on trade with more volume behind the gains that we've seen in today's session. Charlie breaking down the numbers, but we're up almost 2% on the NASDAQ and about a 1.25% gain on the S&P 500.
Yeah, Carol, serious conviction, too, in the S&P 500. 505 stocks traded there, by the way. 434 are higher, only 71 are lower.
Yeah, that's pretty broad-based buying. All right,
let's bring in our next guest. It's Luca Paolini, Chief Strategist at Pictet Asset Management. Luca joins us on the phone from London. Luca, how are you?
Well, not too bad, thank you.
Hey, it's great to have you back with us. I got to say, I've been saying this all week. Well, it's only Tuesday, but I've truly been saying it because of the rally that we've seen. We're only about 4% off of all-time highs on the S&P 500 right now.
You're obsessed with that.
I am, because what has shifted, really, in the last few weeks?
I think what has changed is the following, is that, of course, the war in Ukraine is horrendous, is terrible, but the general sense is that the news flow seems to be getting, maybe not better, but it's not getting worse. And markets move on the second derivative, right? They move on the direction. And I think, markets were significantly oversold for a number of reasons. Of course, the situation, the war in Ukraine, the Federal Reserves, weaker data. And now everything seems to be not as bad as we thought it was. And so I think that there is this kind of sort of relief rally in the market, which has been very significant, because since the date of the invasion, the market is up basically 10%, which is a huge rally in a very difficult and challenging situation.
Right. Hey, Lucas, so it makes you wonder, all right, maybe on the downside were investors, at least equity investors, just too negative. But I do wonder, now that we've seen a bounce back, are we maybe too enthusiastic about the outlook? How do you see it?
I think so, and I would love to be more optimistic, but the fact is that we have growth in the U.S., but not only going down from exceptionally high level, but growth is going to be weaker. Inflation is going to be higher. When we look at valuation, a few weeks ago, valuation was looking okay, but now with bond yields up so much and equities as well, the relative valuation of equity versus bond, especially in the U.S., is not attractive anymore. And we see downside risk to earnings.
So you're taking a look at the yield on the S&P 500 versus what, a yield on the 2-year?
Yes. Yeah, I look normally at the earnings yield for the S&P relative to the 10-year Treasury bonds, and now we are pretty much at neutral level. If anything, equities in the U.S. look more expensive than bonds, believe it or not. So I think there are a lot of potential negative news that, for now, investors don't look at that. But I think it's fair to say for us, we are turning much more cautious after the rally that we have seen in the last few weeks.
You argue, and this is thanks to notes from our producer, Paul, that deteriorating earnings momentum, which you've talked about, valuation, which you've talked about, tight labor market, suggests a rotation from equities into bonds in the coming months. When is the right time to move into bonds?
Well, that's very difficult, of course. I think we have seen today, actually for a few minutes, right, the inversion of the yield curve and years to years. My point here is more strategic. When we are in a situation where the yield curve is inverted, the economy is overheating, the Fed is hiking rates, and valuation is kind of not particularly attractive. If we have almost nothing, as we have almost no government bonds in our multi-asset funds, I think it's time to reallocate slowly, no rush, away from equities into bonds. I think at 275, probably on a 10 years bond yield, is probably the level where I will feel more confident about it. But first, we have to see a peak in U.S. inflation. And also, I want to see the Federal Reserve, at least at the margin, to tone down this kind of hawkish rhetoric that we have seen. Until then, I think it's still a little bit dangerous to move aggressively into bonds.
Yeah, I hear you, because it certainly kind of meshes with some of the conversations that we've had here at Bloomberg about that even if we have a recession, maybe it's not until a year or 2 years from now, right? And in the meantime, if you're out of the equity markets, you could miss out on some of the gains, as volatile as the markets may be, some gains that we may still see perhaps here in 2022, especially since our Gina Martin Adams reminds us that estimates on earnings growth continue to improve for the first quarter, which we're going to start hearing from, but also the second and third quarter.
Well, I think, look, it's difficult to predict a recession. The yield curve is telling us that it's going to be next year. But you're totally right. It's always painful to be too bearish too early. But it's also fair to say that all the positive that we have seen in the past couple of years, QE, acceleration in growth, flows, they're actually turning. And again, I think it's important that, at least for us, as we manage a multi-asset fund, to be balanced in what we do. And I think before we had almost nothing in bonds. Now, again, because of valuation, because of what the Fed is doing, I think we're getting to the point where we should add a little bit in bonds. But for equities, I think, yes, there is still a bit of upside. We have still maybe 5% upside this year, maybe less. I don't know if it's worth now chasing the market higher when, at least in our view, the upside is quite limited from now.
Luca, which bonds?
Well, we like tactical and strategic Chinese government bonds for a very simple reason. You get almost a 3% coupon. There is no inflation. There hasn't been QE, so there is no QT.
Did you say Chinese?
In China.
Did you say Chinese?
Yes.
Wait, say that again. So wait, where would you put where are you putting it? Say it again. I'm sorry. Just want to make sure we heard right.
In Chinese government bonds. Of course, we have a very limited kind of weight in government bonds in China. But the fact is that we have, again, almost a 3% coupon. There is no inflation risk in China, and there is actually monetary easing.
Right. I was going to say they're cutting rates, so right now. That makes sense.
So I think that's the reason. And we also start to find some good value in investment-grade corporate bonds in the U.S. I mean, investment-grade corporate bonds has been the worst asset class year to date. If the U.S. economy continues to be relatively strong, profitability remains solid, I can see some value in that part of the market that's been struggling a lot in the past few weeks and months.
Well, great to check in with you and get your perspective. Luca Paolini, he's chief strategist at Pictet Asset Management, joining us on the phone from London. So
we don't hear that every day.
No, but it makes sense. I mean, we've talked about this, right? In terms of global central banks, China, we know, is moving a much more easing strategy when it comes to monetary policy, certainly
different direction
odds,
than many of the other central banks.
Concerned about growth and maybe juicing the growth there. So, you know, that's when you start to look at the differences around the economy, the global economy. All right, folks, we just have a few minutes left in the trading session. Equities off their best levels of the session, but we definitely see some risk on today. All right, coming up next, we'll be joined by a Bloomberg TV team for Beyond the Bell, live on Bloomberg Radio, Bloomberg TV, and YouTube. We are counting you down to the close on this Tuesday.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Taylor Riggs counting you down to that closing bell. Here to help take us beyond the bell. It's our global simulcast with Carol Massar and Tim Stenovic. We welcome in our audiences across Bloomberg Television, radio, and YouTube. And Carol, we are around the highs of the day on all of the major indices here. Definitely a much more bullish sentiment here on this day than maybe what we saw just a couple of weeks ago.
Yeah, and as we talked about earlier, Romaine, and something that you like to point out, I mean, it is a broad-based rally that we're seeing most of the major industry groups, and we'll get into it shortly, in the S&P 500, though, seeing some gains out there. So investors kind of finding opportunities in lots of places, Tim.
Yeah, it's pretty remarkable to see this rally since the 14th of March. We're now only 3.5% off of all-time highs on the S&P 500 right now.
You know, Tim, we've been joking all day about the great yield curve inversion that is happened and then it's over.
That yield curve is no joke, Taylor.
On a more serious note, I think a lot of investments and economists will get to this, I know, a little bit later on the show. We're looking at how deep it inverts and then, of course, how long it stays there as sort of a true tell sign of sort of the future.
Do you remember where you were when the yield curve inverted today on the T's, 10s?
Not in front of her IB, unfortunately. Having been counting us down for that hour before. Blinky, you missed it. Maybe it'll invert once again, but we do start to see, of course, the fundamentals not looking too bad when you look on a day of data with consumer sentiment looking a little bit better. The JOLTS data, once again, just showing how this labor market fires on all cylinders.
And you remember just 3 weeks ago, I was looking at this earlier, you only had about 20% of the S&P 500 members that were higher on a year-to-date basis. As of right now, at the closing bell, that number is basically more than doubled. You've got about 40 members right now that have managed to get back above the waterline on a year-to-date basis, and there are quite a few others, maybe another 10, 15% of the index that is really only a few ticks away from erasing all of their losses so far for the year. As we stand right now on the day, the Dow Jones Industrial Average going to finish higher by about 1% or 339 points. The S&P higher by 56 points or 1.2%. The NASDAQ higher by 265 points or 1.84%. And the outperformer of the day, well, you're going to give that Oscar to the Russell 2000, 2.6% higher on the day as you start to see bids come back in to some of those smaller cap cyclical names.
No acceptance speeches, please. All right, let's get to the S&P 500. As we said, broad base, so 437 names in the S&P 500 posting some gains today, and Taylor just about 68 lower.
Yeah, Carol, it's so interesting. On sort of a sector level, we talked about this a little bit earlier, really, really broad base, just 2 notches down underneath the surface of that main index level. For our radio audience, the sector winners, the sector losers, it is all green all across the screen. So even the underperformers still actually gained on the day. Let me just start with some of the winners. It's consumer durables, it's real estate. Maybe that feels a little bit defensive, inflationary, right? You're up 3.5%. You have some technology in there. I don't want to steal your thunder, but I think Apple's on one of the best winning streaks that it's had since about 2003. I'll migrate quickly down to the bottom. Some of the underperformers are still in the green, but it's the dividends and the banks that sort of is what you would expect on a yield curve flattening kind of day. There is one sector, Carol, down in the red, only red one here for the day. Energy, though, you're off about 0.5%. Oil really sort of helping drive all of these lower.
Yeah, but it's so much higher rate for the year. Hey, you mentioned Apple. Let's keep in mind that winning streak. We haven't seen something like that in 20 years. So there's lots of discussion about whether we should read too much into the move and what that means for the overall tech sector. Having said that, I've been looking at some of the companies that are going to be reporting earnings earnings after the close today. Lululemon among them, rallying up about 3.7% in today's session. Keep in mind the CEO did warn back in CEO about the Omicron variant limiting operations, so we're going to be watching to see if they outperform there. RH, formerly Restoration Hardware, we talk about them a lot. They're down about 30% so far this year, but they're up about 5% today. Keep in mind about 16% of the float is shorted, so we'll see whether or not we see some outperformance there. And Chewy is a big short. About 30% of the float is shorted. Again, also rallying about 4.5%. So we'll see if we see a kind of short squeeze.
And one other one we're watching, of course, is Micron. Those earnings crossing the wire right now. It does appear that the company did beat for their fiscal second quarter numbers. Adjusted EPS coming in at $2.14. The street was looking for $1.99. So a beat there on that measure. Cash flow from operations, $3.63 billion. That's a little bit lighter than what the street was looking for. They were looking for about $3.95 billion. Not seeing a forecast just yet, but we're going to keep an eye on this, Tim. Micron shares higher by about 5% here in the after hours.
Yeah, also keep an eye on shares of Lululemon as well. We'll get earnings from Lulu soon, as well as Chewy, among others. Hey, Taylor, you mentioned the broad-based gains in the S&P 500 today. It was a tough day to actually find notable decliners, but shares of fertilizer stocks taking a hit today as de-escalation in the war in Ukraine. A pullback in the invasion could help ease the disruptions to the global fertilizer trade, potentially relieving some of that market tightness that we've seen over the last few weeks. CF Industries falling by 5%, still though up more than 40% since February. Also keep an eye on shares of Ball Corp. Some more Russia-related news. The metal packaging provider seeing its shares fall by 2.6% today after it said that it was reducing operations immediately at 3 manufacturing facilities in Russia and pursuing a sale of its Russian businesses to a new owner. Unclear though how much money it will be able to get and whether it'll be able to get the cash out of the country. And then GameStop shares finishing the day down by 5%, finally down after being higher for 10 days in a row. Its longest rally since 2010, up about 140% since March 14th. Return on the meme stock?
Meme stocks, they're back. We're calling it.
They really are.
AMC on the higher side. A number are getting caught up in that particular retail frenzy trade. Meanwhile, though, I look at what's perhaps not had so much of a frenzy today, and it's the Bloomberg Dollar Index. For once, it feels as though the entire day's trade was dictated by hopes, by optimism surrounding Russia and Ukraine, whether or not we're seeing any sort of a pullback, a curtailing of aggression, particularly around Kiev from Russia. Many more cynical in terms of government leaders, but the market looking far more on the bright side, and that meant that you didn't want the haven that is the Bloomberg dollar. Went down by 0.6%. You even found that the yen for once pushed higher, having been down under pressure for so long in terms of different monetary policy outlooks from the Bank of Japan versus the Fed. The yen was up 0.8%. The Swedish krona significantly outperforming, more than 1.8% higher. Icelandic krona, make of that what you will. But what we do also see is actually a day where we see a pulling back in terms of commodities prices for exactly the same reason, because we're hopeful what happens between Russia and Ukraine. What that means is zinc's off by Brent crude off by 1.25%, steel falling by 1.25%, metals fall lower, agricultural prices fall lower. And we also see, well, again, the bond rout was happening worldwide, but perhaps not so much on our shores, Taylor.
Certainly not, Caroline. It actually was sort of a day of price higher, yield lower, except for the 2-year yield, where we'll just hit this quickly, up 3 basis points on the day to a 2.36. The real big story, of course, then was how close we're getting on the 2s/10s, just 2 basis points away, because you have a 10-year yield that migrates downward on the day, 7 basis points to about a 2.39.
And going back to those Micron earnings, the share is still higher by about 5%. Those fiscal 2Q numbers did beat. As far as the guidance here for fiscal 3Q, adjusted revenue, the guidance being given is $8.5 to $8.9 billion. The street was looking on average for 8.2. As far as EPS, the guidance, $2.36 to $2.56. That's the range that the company is giving. On average, Taylor, the street was expecting $2.24.
Don't make jokes about Lululemon shoes, Romaine, because this is a company that just continues to, I think, prove its worth. Take a look at this. They're looking at fourth quarter earnings per share. That was, of course, the previous quarter well ahead of expectations, $3.36 versus estimates of about a $2.52. That was a year-over-year basis, but it really has been about a big margin story. On the fourth quarter, margins are at 58.1% versus estimates of 57.9%. And really forward guidance when you think about next quarter, that first quarter net revenue, $1.53 billion versus estimates of $1.48. So really guiding not only first quarter, but also full year net revenue, Caroline, higher.
Lululemon's shoes might be in fashion. Tell you what else is in fashion.
What's that?
Stock split.
So hot right now.
Stock splits.
RH announcing intention to execute a 3-for-1 stock split. We were just hearing, Carol, you had RH on your board, and now it looks as though they're following the Teslas of this world, the Amazons.
Yeah, right. We keep seeing companies do that to potentially make, I guess, the share price accessible to more investors. But I mean, this is a stock that's been under pressure. It has a high short position. We know, we talk about them, certainly playing into all the home buying that's going on, but the stock's up 5% here in the after. Our stock closing at 385 and change in the regular
Yeah, do we see a similar investor reaction that we saw from Tesla and from Amazon shareholders after?
Well, for a stock that's down 28% on a year-to-date basis and 47% from its all-time high, I'm not sure accessibility is the main issue here.
Yeah, that's a really good point. Hey, when it comes to restoration...
So why do they do it then?
RH,
So why do they do it then?
It's a good question. You're wearing the turtleneck.
Well, Matt Levine had one story that, of course, we know it's not always about fundamentals because you can buy proportional shares. Caroline, I would argue that we get him on the program first thing tomorrow because he does say that within the options market, actually sometimes some of those round numbers make sense when you're thinking about some of the calls and the puts. So certainly if you're just buying a stock, yes, nothing fundamentally has changed, but there is a bigger, deeper story here when you think about the retail investors in that derivatives
Do market. we care about Chewy? Those earnings
course
are
we
out.
do.
Yeah.
Those shares are down pretty significantly, down 10%.
Yeah, and there's been concerns about inflationary costs. I want to just point out Berkshire Hathaway in the 13F filings showed that they had boosted their position in the fourth quarter.
No stock
When
split
is
for
Berkshire splitting that stock?
That's what I was thinking, Romaine.
Are we
That would be the mother of all stock splits, right?
Shares.
All right. I'm out of here. Yeah, Chewy's down about 11% here. All right, we're going to run, guys. That'll do it for our cross-platform coverage on radio, TV, and YouTube. We will see you again, same time, same place, tomorrow.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
I want to get to Chewy because that was at the tail end of our coverage with our team, down about 12% here in the after hours, and looking for some of the numbers.
Well, I can read from the press release here. The Sumit Singh, the CEO of Chewy, said, quote, our ability to deliver 24% net sales growth in 2021 on top of the outsized growth we delivered last year reflects the durability of our business in the pets category beyond the near-term benefits of the pandemic. Because that was a big question, Carol.
Yeah, I'm looking for more of the specifics, and we'll look for it and then get it out to you. Fourth quarter net sales, 239 versus an estimate of 242, so that's a disappointment. Fourth quarter adjusted EBITDA loss of $28 million versus an estimated loss of $73,000. That is a huge loss. And that may be why investors are selling it off big time.
We'll have more on Chewy in just a few minutes. In the meantime, a check of world and national news with Nancy Lyons in Washington, D.C. Hey, Nance.
Hey, Tim. If you're over 50, the FDA says you can roll up your sleeve again for another booster shot of the Pfizer or Moderna vaccine. The Food and Drug Administration's decision means those over 50 can receive a fourth shot at least 4 months after their previous booster.
If it were my relatives, I would be sending them out to do this because of the higher level of protection.
That's the FDA's Peter Marks. The CDC is expected to also weigh in on whether everyone who's eligible needs to rush out and get the booster. Meanwhile, President Biden is concerned about the next pandemic and has proposed additional money in his newly released budget, as we hear from Bloomberg's Amy Morris.
Health agencies would get nearly $82 billion in mandatory funding over 5 years to help prepare for future pandemics, even as the administration also asks for more money, $22 billion, to fight the current one. The Health and Human Services Agency would get a 27% increase in funding to emphasize vaccine programs and expand immunization efforts. Another $5 billion would create Biden's proposed new biomedical research agency known as ARPA-H. In Washington, I'm Amy Morris, Bloomberg Radio.
Almost 24 Democratic lawmakers are demanding that Supreme Court Justice Clarence Thomas recuse himself from any cases involving the 2020 election or the insurrection after revelations his wife advocated actions to overturn election results. In a letter to Chief Justice John Roberts and Justice Thomas, they say letting him participate in those cases, considering his wife's participation, is difficult to reconcile with federal ethics requirements. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, Nance, thank you so much. Carol Massar along with Tim Stanovic. We want to get to a couple of earnings that have just come out. I do want to mention, because the headline just crossed, this is in no order of priority, but REH, formerly Restoration Hardware, which came out and... Right, now RH. Fourth quarter net revenue, that was a miss. Fourth quarter adjusted EPS, that was a beat by about 6 cents a share. We know we've talked about the RH CEO planning to exercise expiring IPO options, but the company also saying it's seen softening first quarter demand coinciding with the Ukraine war, and that stock right now bouncing around. Initially, we saw a pop up. Now it's down about 7% after hours.
Is that consumer sentiment?
That's I want to know what that means.
Yeah, because we're talking about, a home furnishings company. So, yeah, we'll try to get more details on that.
And is it just, I don't believe they sell much overseas? Is it, I don't know, is it fear? I don't know what that means, right?
Yeah, and look, I think sentiment, though, Carol, has changed in recent weeks. Certainly a different tone today when it comes to the trade versus what we saw just 2 weeks ago. Hey, I want to hit Chewy because shares are sinking after hours right now. The fourth quarter adjusted EBITDA loss, this is one you highlighted. This was a big miss, $28.1 million versus estimates of just $73,000. Fourth quarter net sales also coming in below estimates, but only slightly, $2.39 billion, versus estimates of $2.42 billion. Shares sunk as much as 15% in after hours.
And I should point out the short position on this company is about 30%, and the bearish bets have been climbing, now hovering near the highest level since June of 2020. I mean, the valuations prior to this release, tough PE of 1,736, forward-looking PE of 451. There were some concerns, inflationary concerns about freight and costs, so we are looking for more commentary on this one. Micron, by the way, is up about 3.5% here in the after hours following earnings. And quick check on Lulu?
Up 5.3% after first quarter net revenue came in above estimates.
All right, so a lot of movement in the after hours. All right, we are all earnings. This is Bloomberg.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks push higher and lots of earnings after the closing bell. Let us begin with Micron Technology. Micron forecast adjusted revenue for the third quarter. That guidance did beat the average analyst estimate. After hours, we got shares of MU. Micron up by about 6%. Chewy's fourth quarter net sales, $2.39 billion. Estimates $2.42 billion. Chewy shares after hours, they are tumbling down by roughly 14%. Also reporting after the closing bell, Lululemon. It forecast net revenue for the first quarter. Lulu's guidance beat the average analyst estimate. Lulu after hours up now by about 7.5%. Broad-based rally today amid optimism for progress in talks between Russia and Ukraine. Most Treasury yields retreated while a key segment of the curve inverted for the first time since 2019. Key takeaway, S&P up for a fourth day, advancing 56 points, closing close to session highs, up 1.2%. The Dow up 338, up by 1%. NASDAQ up 264 for the NASDAQ Composite Index, up by 1.8%. 10-year yield 2.39%, 2-year yield 2.36%. Spot gold down 0.2%, $19.19 the ounce. West Texas Intermediate crude oil down 1%, $104.94 a barrel. Recapping a rally underway on Wall Street today with the Dow, the S&P, and NASDAQ moving higher. S&P up for a fourth day, up by 1.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So private equity continuing to put money to work. That includes another funding round for Brightline, a provider of virtual behavioral health services to kids and their families. Now with a valuation of more than $700 million after raising more than $100 million from investors led by KKR. Luckily for us, we've got the head of that company. Bloomberg's Gillian Tam, by the way, wrote this story and hooked us up.
Yeah, Naomi Allen is the co-founder and CEO of Brightline. She joins us on the phone from Palo Alto, California. Naomi, how are you?
Great, and thank you for having me.
I got to say, when I was doing research about this, I thought of something that I saw the other night, which was I was looking at Nextdoor, which is the social network for neighborhoods, and I saw a post from a parent that said, "I apologize for using this forum, but I need a therapist for my child." And the parents at school or the teachers at school say that because of his misbehavior, he needs to see someone. Does anyone have any suggestions? And I started reading this story, Naomi, and thought to myself, this is exactly the type of product that this parent could benefit from. How did you end up founding Brightline?
Well, honestly, I was that parent. Tim, I have 3 kids. My oldest son had real behavioral health needs a number of years ago, and my family and I started looking for care that was covered by our insurance, that was available to us, and we found nothing that didn't have a 6-month wait list. It was all cash pay. We actually didn't even really know where to start. We didn't know if he needed a therapist or a psychiatrist or occupational therapist. And so I think as a country, we are at this critical mental health inflection point where we just need a radical change. And certainly COVID, I think, has drawn out even a greater need for that change.
So tell us how the platform works.
Yeah, thanks, Carol. We provide a national solution for families that's an in-network benefit. That means it's covered by insurance companies. And we offer it through employers so they can provide it to their employees and the children of those employees. There are 3 levels of care. So basically, we meet families where they are. Some families may just need a bit of self-guided content or exercises, digital exercises or recommendations for how to support their child. Some families need things that are more skill building. So for example, a family that maybe has a child that doesn't have a clinical level of anxiety, but is anxious about taking their masks off at school, or a child that doesn't have depression, but is struggling with maintaining a proper sleep schedule. Those things can become full-on clinical anxiety or depression if left unsupported. And so for those things that are lower in terms of the clinical scale, we provide coaching, which is real skill building for children, adolescents, teens, and parents and caregivers. And then for things that are truly in need of a clinical service or a diagnosis, we have a full care team of therapists, psychiatrists, speech language pathologists and they work through evidence-based and measured clinical protocols.
And forgive me, Naomi, I know the company is based in Palo Alto. You're joining us from Washington, D.C. Just wanted to clarify that. What about when it comes to insurance and paying for this and how it compares to comparable services that are perhaps more traditional in the sense of in-person?
Absolutely. Well, I think first I'll say if you are seeking pediatric mental health services in the United States, you're 10 times likelier to have to go out of network for those services than primary care. So it would be as if the status quo in the country were that we just didn't have pediatricians covered by insurance. It's kind of wild to imagine that, but that is the world that we've been in. And so Brightline is the first national provider that has network relationships with local insurance companies and local Blues plans, as well as national insurance companies. And so a family that goes to Brightline through their employer would have, in some cases for some services, no out-of-pocket costs at all. In some cases, they would just be paying a deductible or a copay for the services. So it's a radically different affordability level for families.
What's been the ramp up on the platform in terms of usage? Give us an idea in terms of individuals joining the platform, usage of it. Love to know about your growth metrics.
Absolutely. So the company is just over 2 years old. Last year was our first year offering our product through employers, and we saw about a 4 times increase in terms of employer demand. So in our first couple of months of offering Brightline, we signed up 50 employers. We also, interestingly, over the past year and a half, started talking with insurance companies to make sure that Brightline was affordable to families. And we thought we would sign up 1 or 2 small insurance plans. We've now signed up 5, and we're working on 5 more. So today we cover about 24 million lives through those insurance contracts and expect to be doubling that by the end of the year.
Hey, Naomi, we only have about 40 seconds left with you, but I want to make sure I understand this. Can people whose employers do not sign up for it still access Brightline services?
They can. We also have a direct-to-consumer offering, which is covered by some insurance products, but most of our members are accessing us through their employer. And if you're an employee or a benefits executive or an executive, and you want to learn more, you can visit us at hellobrightline.com.
Well, great to check in with you. Please stay in touch. We'd love to know more as the platform grows and usage grows, and love to hear more about it.
Yeah, Naomi Allen, co-founder and CEO of Brightline, joining us on the phone from Washington, D.C. It also makes me think of employee retention, right? And, this is another added bonus for companies to give to their employees to attract and retain them.
Well, and I think about the pandemic, how much we've talked about not only physical wellness, but mental well-being, and hoping that this continues the conversation and really usage for so many individuals who need it. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Investors loving Lululemon.
Oh, I haven't even checked lately.
Up 8% in the after hours.
Are you going to get the shoes?
I don't know about that. I do love their, full disclosure, love their yoga pants.
People
love a lot
love
of their
Lululemon stuff. I bought a couple of men's stuff there a couple of years ago.
I buy a lot of stuff on sale too, though.
Shirts.
It's
expensive.
I know, but it's good stuff.
Yeah.
Once they figured out the sheer yoga pants problem. All right, moving along. We're going to get to our Poonam Goyal. She's going to break down the quarter for us and the outlook in just a moment. Let's get back to Charlie Pellet. You run around in yoga pants all the time, don't you?
Oh, yeah, only those sheer ones, of course, around the office, too.
Wait a minute.
All right, here's what's going on. We have got the Dow, the S&P, NASDAQ all higher today. Lululemon, by the way, after hours, as you guys mentioned, rallying now by 8%. We'll have more on that story coming up for in just a moment. The other big story, Micron Technology after hours. MU up now by 6.5%. It is the largest American maker of memory chips, out with an upbeat forecast for the current quarter, a sign that demand remains strong from rapidly expanding data center customers. The Dow up today by 338, up by 1%. Stocks did close to session highs today. S&P up 56, up 1.2%. NASDAQ up 264, a gain there of 1.8%. 10-year yield 2.39%, 2-year yield 2.36%. Stocks higher in a broad-based rally on optimism for progress in talks between Russia and Ukraine. Luca Paolini is chief strategist at Pictet Asset Management, and right here on Bloomberg Surveillance, he talked about the reasons for the rally.
And I think, markets were significantly oversold for a number of reasons. Of course, the situation, the war in Ukraine, the Federal Reserve's weaker data, and now everything seems to be not as bad as we thought it was. And so I think that there is this kind of sort of relief rally.
Today we had gold dropping by 0.7%, actually down 0.2%, $19.19 the ounce. It was crude oil, West Texas Intermediate, that's down 0.6%, $105.28 a barrel on WTI. Chewy after earnings, plunging after hours, right now down by 14.8%. I'm Charlie Pellet. That is your Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We mentioned Lululemon out with their earnings, and the stock is up about 7.5% in the after hours. So, Tim, let's just get right to it.
Poonam Goyal, senior analyst for e-commerce at Leisure Off-Price Retail. She's with Bloomberg Intelligence. Poonam, a strong quarter for Lulu. You've had some time to go through the release, dig into the numbers. What sticks out to you? Because investors are certainly happy.
And it looks like a strong outlook, too.
It's good all across the board. The quarter was good. The guidance was good. The inventories are good. So all across the board, we're seeing strong momentum. Digital sales were better than expected, which is nice to see, given that consumers are coming back to stores. But store sales were also healthy, up double digits.
Didn't hurt too, right, that they authorized a $1 billion stock buyback program. We see companies continuing to put money to work that way.
Yeah, absolutely. Companies are buying back their stock. We've seen the markets over the course of the year, and they continue to show confidence in their businesses by giving back to the shareholders through buybacks or dividends.
So help me out here, Poonam, because I thought back in January, the CEO issued a profit warning saying the Omicron variant had limited operations. So I'm
staff shortages, disruptions in stores. Yeah.
So I'm wondering, did they reduce expectations, and so we're now just beating those reduced expectations, or is it even better than that?
It's better than that. I mean, if you look at the breakdown carefully, you'll see that comparable store sales. So total comparable sales increased 22%, right? But the breakdown between that, which is stores and digital, I think initially we would have all went in thinking that store sales would have been higher, much higher than the digital sales. But what we saw relative to consensus expectations is that digital sales actually grew much faster than consensus had expected. So digital sales, direct to consumers, were expected to increase about 12 to 13%, and they came in at 17% higher. Whereas comparable store sales, while they still increased nicely, given that, we're still returning back from comparisons that people didn't go to stores during the pandemic. So they were up 32%, but that was a little shy of what consensus had expected. So we just saw a shift, right, because of the Omicron variant, where people went more online when I guess that kicked through versus in store. But regardless, both numbers very, very strong.
Hey, Poonam, I'm wondering about any, going into this, we were talking about Lululemon expanding into new categories, including shoes, which we recently learned about it, women's shoes. And I'm wondering if we've gotten any details on that. I couldn't find anything in the press release, but what do you know?
Well, we haven't gotten any detail from them, but we do know that we've been looking at the site and their stores, and some of the models are already sold out. So great initial response.
That's interesting.
And we did a piece on it earlier when they came out with it, where there's been criticism about them entering into shoes, right? Because it is a lower margin category. So if you think about the margins on shoes, they're under 50%, and that's gross margin, whereas Lululemon's overall gross margins are closer to 57, 58%. So when you bring in a category that's of lower margin, clearly brows raised that, this is going to dilute the margin. Well, we did the work on it, and even if Lululemon gets to $1 billion in shoe sales, which is kind of the path that Under Armour took when they expanded into shoes, the impact to margin is still less than 50 basis points, and that's over 10 years.
Okay. Is it important that they did this? Was there another product that you would have rather, or some other initiatives that you would have rather they had done, or no?
No, I think it's the next big adjacent category, right? When you think of apparel, you think of accessories, and then you think of shoes. So I do think it's the next category, given that it is a performance and activewear brand, that just makes sense for them to be a part of. And they did test this. I mean, they didn't test it with their own brand, but they had APL in their stores a few years ago, and that worked out great. So they saw that people wanted shoes and people wanted performance shoes. And going into women's first, I think was the smartest move that they could have made, because they already have the women customer. And when you think about women across other athletic wear brands, whether it be Nike or Adidas, only recently have they started to push more aggressively on women, creating product for women. Before, it was just like, okay, we created this great shoe for a guy, and we'll put a pink color on it, and that'll be for women. Very different.
So
And
sad.
it drives my wife absolutely crazy.
It's so true.
Yeah.
Hey, I am on the website, and there are still some sizes available, but you're right, so much of it, especially on popular shoe sizes, are all sold out for that Blissfeel women's running shoe.
So, Poonam, what are the questions that you want Calvin McDonald to answer, other executives to answer on their earnings call?
I think we want to know, where are they going from here, right? So whether it's with shoes or whether it's with the core business, digital, internationally, do they still continue to think they can meet their long-term plan? Is there upside? We're coming to a point where they will need to update their long-term targets, because we're at the tail end of that. So any guidance on, what the next 3 to 5 years look like when they're ready to give us that would be interesting. And then just the strength in the market today and about pricing. We've heard a lot of companies talking about price increases due to inflation. What are they thinking about that? That would be interesting to hear.
All right, looking forward to that. And thank you so much. Always appreciate your analysis. Poonam Goyal, she's Senior Analyst for E-commerce, Athleisure, and Off-Price Retail for our in-house analyst team, Bloomberg Intelligence, we call it, on the phone out in Vegas today. And Lulu shares, man, rallying up about 7.25% here as we speak.
Are you going to buy some shoes?
From them?
Lulu
I don't
shoes?
know. I don't know about that. I don't know. I'm not a big sneaker person, or, I've got a couple pairs, but maybe, I don't know. I have to try them on, see if they're comfortable.
We'll see. Let's get to Washington, D.C. for World and National News with Nancy Lyons. Hey, Nance.
Hey, Tim. A second booster is now being authorized by the FDA for both the Pfizer and Moderna vaccines. Today's decision applies to everyone 50 years of age and older, and some who have a compromised immune system. That means a fourth shot at least 4 months after your first booster. While the highly transmissible Omicron variant has declined overall, the virus's BA2 strain continues to spread, leading to concerns about a resurgence. Still no ceasefire, but some progress in Russia's invasion of Ukraine. Moscow says it will reduce military operations in areas where its forces are being pushed back, including the capital of Kyiv. President Biden, though, is not convinced it'll happen.
We'll see. I don't read anything into it until I see what their actions are. We'll see if they follow through on what they're suggesting.
President Biden says until Russia matches its actions with its rhetoric, the U.S. and its allies will continue to keep sanctions in place. Well, there's a more than 7.5-hour gap in the White House phone records from January 6th of last year, and that's raising new questions.
The Washington Post and CBS News say they have obtained the 11-page call log from the National Archives that's been turned over to the House committee investigating the January 6th riot. The 7-hour, 37-minute gap means the panel has no record of former President Donald Trump's conversations at the time the mob of his supporters stormed the building. The records do show the former president made at least 8 phone calls calls in the morning that day and 11 in the evening. Sources tell the Post the House committee is now investigating whether the former president used AIDS phones or burner cell phones during the gap. In Washington, I'm Nathan Hager, Bloomberg Radio.
Global news 24 hours a day. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Massar, Tim Stanovic. And, Tim and I, we spend a lot of time talking about work and inequality.
Not as much as Matthew Boyle.
And he's got a winner, humdinger, if you will.
Yeah, and Matt Boyle covers work and the future of work for Bloomberg News. That's why I made that joke.
And
he spends a lot of time.
He asked, why do workers quit?
Well, one reason could be the business degree framed on the wall of the CEO's office.
What's up with that?
Matt writes that in both the U.S. and in Denmark, when a CEO with a business degree takes over from someone who lacks that pedigree, the result is a significant decline in wages over 5 years. That's according to a paper co-authored by an MIT economist. Those managers with business degrees also don't have much of a positive impact on the firm's output or productivity, the research found, but instead prompt the more valuable staffers to quit. I'm not wild about this.
All right, so Mr. Degree.
Yeah, I have one.
The findings based on around 9,900 U.S. publicly listed firms with complete information on CEOs from 1980 to 2020 come as millions of Americans quit their jobs, which has sent businesses scrambling to get more creative in recruiting and retaining workers. That often includes higher wages, sending employment costs to new highs. Labor Department will provide an update, of course, Tuesday. We actually got that today.
Well, I can tell you, Carol, we didn't spend a lot of time in business school talking about how we could pay workers more, okay? I'm serious.
But it's interesting.
We talk about margins and how to make margins bigger.
So the point is, just because you have this degree doesn't mean you're going to make more.
Exactly.
So
or the opposite. Or you're not going to retain talent, you're not going to pay more.
Right. So what's the takeaway? Don't get a degree?
Or the takeaway is, what companies, the performance of companies under people who have these degrees.
So bosses with MBAs often prompt a firm's best workers to quit.
It's not great.
It kind of goes against.
I want to see the research.
Yeah, it says there's no evidence that business managers are more productive or increase sales relative to non-business managers. Rather, it is their differential wage policies that translate into higher profits and higher returns for shareholders, according to the researchers.
Yeah, business school is fun, though.
How's it paying off?
Yeah, okay.
All right, you are listening to Bloomberg Business Week on Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We had a broad-based rally on Wall Street today amid optimism for progress in talks between Russia and Ukraine. Most Treasury yields retreated, while a key segment of the curve inverted for the first time since 2019. S&P up for a fourth day, closing above the 4,600 level for the first time since mid-January. S&P up today by 56 points, higher by 1.2%. S&P, by the way, now at 4631 year-to-date. It is lower by 2.8%. The Dow up 338, up 1%. NASDAQ up 264, up today by 1.84%. 10-year yield 2.39%, 2-year yield 2.37%. Spot gold down 0.2%, 19.18 the ounce. West Texas Intermediate crude down 0.7%, 105.27 a barrel. Lots of earnings after the bell. Lululemon Athletica delivered a sales forecast for the year that exceeded analyst estimates. Shares up by 7.1%. Micron Technology, the largest American maker of memory chips, gave an upbeat forecast for the current quarter, up by 6.5%. From chips to guacamole, it's about to get a lot more expensive. An index tracking avocado prices from the top avocado-producing state in Mexico shows the wholesale price has jumped 81% this year. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So the TV ratings company that's been the gold standard since the 1950s, about to go private. And I believe, wasn't this among the most, or the biggest gainers?
It was,
in
yeah.
the S&P 500, up 20% today. Number
Just
one gainer.
today.
Yeah.
Cameron Leach is a reporter for Bloomberg News.
Did we say the company?
Oh, no, I'm going to say it now.
Ooh,
Yeah. Well, you say what it does, and it's like everybody knows, right?
Does anybody else do it?
There is one other
Used to be
company. There used to be another company.
Arbitron?
Yeah, that's what I'm talking
Ratings,
about. Yeah.
Okay.
We're talking Nielsen.
Thank
Okay. Nielsen set to go private in a deal led by Elliott Brookfield. You heard me mention Cameron Leach. He's a reporter for Bloomberg News. He's got the byline on this piece. He joins us on the phone from Atlanta. This is a $16 billion deal, Cameron. It follows calls for Nielsen to improve services. We got the activist investor Elliott first pushing for a sale years ago, back in 2019. What does our audience need to know?
Well, let me just say this one was a fun one for me. More so nostalgic, I'd say, because early in my news career, during a stint covering middle market private equity, I had worked in the financial district right by the Nielsen building, where I'd have lunch with friends there. So today's announced deal brings a years-long saga, not only myself but for Nielsen, closer to an end. And look, Nielsen, for even some casual TV enthusiasts, is a recognizable brand when you think TV ratings, as you said. But for those in the business, it's long been a darling for private equity markets. And so now today, it kind of brings the end to a roller coaster over negotiations over the past few weeks.
Yeah, it's interesting. And I was looking at it. By going private, what does that allow the companies, Elliott, Brookfield, allow it to do?
Well, great question. I think, one, for management, it kind of takes a lot of pressure off of the company to kind of service their shareholders. I think that had a lot to do with them trying to go private because they're trying to somewhat just invest in their technology and do a better job for the TV industry itself. If you haven't seen, there's been lawsuits coming out, at least one from media executive Byron Allen, about how the company has just been doing a terrible job, in his words. But it seems like the company is really trying to do better because it is the gold standard for ratings, but there seems to be a need, or at least a want beyond for others in the industry to want another competitor for Nielsen.
Yeah, and that's the thing, Cameron. It comes against a backdrop of declining live TV viewership, and we see the launch of just yesterday CNN Plus, for example, the on-demand service from CNN. So we see even traditional cable stalwarts moving away from traditional cable and more into streaming. And I think a lot of people, it's fair to say, analysts, investors, could have argued that it's not necessarily a great environment for Nielsen because a streaming services company that's not ad supported, like Apple or Netflix, they don't need Nielsen because they don't sell ads.
And we're seeing that really across the industry. We're seeing a lot of the bigger players start to create some of their own in-house technology to kind of do these things. I think just recently, over the past few years, we saw Nielsen wind up getting access to Netflix's viewership count. But still, they also have their own internal technology for these things. And just we're seeing this whole pressure against Nielsen as we see the industry go towards streaming a lot more these days. So it's going to be very interesting to see what kind of tech and acquisitions they do if this deal goes through and gets completed.
No, you do wonder about it. I mean, I remember days where, like, you had to check the Nielsen ratings, right? Like that was truly the gold standard.
For a story or for your own show? I mean, what
for shows
for
and stuff, like you had ratings, like you checked, got numbers.
Cameron's chuckling because like he and I are,
we weren't there yet.
Yeah.
all right. What are you saying? But no, it really was, right? Like you could trust it.
Yeah.
And this is so important in terms of advertising money, right? And so you can understand where Byron Allen is like, wait a minute, if this isn't really accurately measuring audiences. We always talk about technology being disrupted. I mean, does Nielsen have to be worried, though, about other ways of measuring audiences so that it really isn't the gold standard anymore?
I think, to be fair, Nielsen hasn't had to be worried until recently. Once the markets got choppy, we see the 2-year and the 10-year inversing today, and it's just not as good for public companies that aren't doing too well fundamentally. And, I think there's been a long desire within the industry, at least media executives, to want alternatives to Nielsen. We have Comscore out there and some of the others, but it seems to be a need and a desire for more competition.
Okay, so again, going back to a question that Carol was referring to, the idea as a private company, what can it do that it wasn't able to do as a public company? Obviously, it's away from the lens of shareholders, but do we expect it to have some sort of transformation and then hit the public markets again?
I mean, I think that's yet to be seen. I think ideally, people would like to see more tech-in acquisitions for them to increase some of the investments on their technology. I think for them to be able to kind of keep up with where streaming is going, they're going to definitely have to put in a lot of money. That could be billions to kind of keep up to where streaming is going. And we're headed to Web3 now, so we're talking VR and everything else, so we never know what that may look like.
Cameron, you worked in a metaverse reference to a story about Nielsen. We're going like, full future mode.
We're getting there. We're getting there.
How patient are these investors going to be? Because typically they take it private, right? Do a few things, play around with it, and then have an exit strategy. Any indication on how patient they will be?
There's no timetable as of yet from what I've seen from my reporting, but, we're talking about some of the biggest private equity firms here, and there's a lot of cash on hand. In the private markets, we're going to see a lot of M&A this year. At least that's what I'm being told by bankers and lawyers as well too. So I think
talk to us, Cameron. Talk to us more about that. Help us look forward through 2022 because
year?
Because if there's uncertainty, and look, we talked a lot about the decline in SPACs in 2021, but we know there were a lot of deals happening. What's 2022 looking like?
Well, we just came off a record year for M&A. But I think we're going to see, at least from what I'm told, we're going to see something to that same level, but not just as much. I think, the regulatory environment is still a bit shaky for some management teams, so they want to see that play out, especially just to see what the Biden administration will do in some areas. But I think we'll still see a very healthy amount of deals coming out.
Yeah, it's interesting, even with the volatility that we've seen, and we recently talked with an official over at the NASDAQ in terms of IPOs, that stuff was still moving ahead, right?
Yeah, and I also think back to the TPG story we had yesterday, right? And how what TPG is doing under Winx versus Bondo.
Yeah, exactly. Right.
Private equity.
A great read. Hey, Cameron, thank you so much. Really appreciate it. Cameron Leach, reporter at Bloomberg News. Be well, on the phone in Atlanta on that Nielsen going private deal led by Elliott Brookfield in terms of investors. And as we mentioned, no surprise to see Nielsen, your number one gainer in the S&P 500, rallying, some 20% here.
Hey, I got to draw your attention to a story that just crossed. Bank of America is warning that the stock surge is a bear market trap with the curve inverted.
Dun, dun, dun. If I had $1 for every view that came in on the Bloomberg.
Yeah? What would you have?
On my private yacht in the Mediterranean.
Invite me.
Deal. All right, everybody. That's going to do it for this Tuesday. That's a wrap. For Tim Stanovic and the whole Bloomberg business team, have a good and safe evening. This is Bloomberg Radio.